for going long, and Nifty on declines, still a good buy.
Well, good afternoon, Kush. Sharad here, and you're right. Nifty Bank's technical setup seems good, and it seems like Diwali gift might be coming early to the markets as well, and they're cheering. The broader indices are also cheering, so that is something to actually look into it. But what will be your picks? What would be your, let's say, Diwali picks? Let's not say right now, but technically, which are the stocks which are looking good on your radar?
Sure. तो शरद, जैसा मैंने कल कहा, तो दिवाली पिक्स तो मैं दिवाली पे दूंगा, तब तक का इंतजार करिए. But for now, the picks that I have are both of them on the long side. The first one is granules for targets of 580 and 590 and a stop loss around the 560 mark. The stocks seen very healthy accumulation. It wasn't really as disturbed by whatever was happening in the market. It had its steady rise on the back of decent volumes. Mind you, today it has clocked a high of 580, but seen a round of profit booking from there on. But the medium-term structure is still intact, hence the call. The second one has to be from the financial space, because that entire pocket has been doing well. So Shriram Finance is one stock that comes on my radar. The reason being, the stock had a very good run. For the last 5 sessions, 675 was the line in sand that this was not able to cross. Flag and pole formation breakout that came about yesterday, and you're seeing a continuation of that today. So for targets of 687, 699, and the stop loss around the 662 mark, Shriram Finance is a buy. Just a quick 30-second on 2 more stocks. The first one is CESE. Now, the reason I mentioned that is because, as Hiral would know, we have these weekly calls that I give on Monday, and they seem to be doing well, at least right now. CESE was a stock that we discussed for targets of 179, 187, stop loss 164. It's just started its move up. So if you want a positional bet, I think that's your stock. And the second one is Larsen & Toubro. Time and again, I have said Larsen is a stock that you must hold on your portfolio. Now it's becoming, a momentum play as well. And the 38.25 first target has been hit. I think for 39.20 and 4,000 levels, Larsen is something that should be in your portfolio. Keep a stop loss around the 37.50 mark. Also, it provides a margin of safety.
Kush, we've seen a good rally on the Nifty Realty also today. If you can try to pull up the constituents on the Nifty Realty and see as to what are those counters that are really pulling the index up. All counters in the green. And the top one is your Prestige Estates, followed by Brigade Enterprises is what we're seeing. Good moves coming in on all of these counters. Anything that's looking attractive right now to make an entry, even after the run-up we've seen today?
Sure. Hi, Mahima. I think, a lot of these names are starting to see rebounds. That's what they are right now. If you see the underperformance that, something like a DLF, even Prestige for that matter, has had, for the last 3.5 months, has been staggering. So right now, this is rising tide lifting all boats, Nifty giving you a breakout. So the realty sector also participating, which is a healthy sign. If it's more of a positional bet that you're looking at, and by that I mean 6 to 12 months out, yes, some of these stocks are at good support zones, and this uptick is suggesting that the bottom formation for some of these, including Prestige and DLF, could well be in place, and you could consider them from a positional standpoint. However, the only one that stands out from a momentum perspective is very clearly Phoenix Mills. The stocks had a good run, volume accumulation very healthy, momentum indicators comfortably on the rising side. So yes, this could still go higher. On the upside, 1725, 1800 are the next targets to watch for. 1600, the erstwhile resistance becomes a stop loss now.
Interesting. Phoenix Mills. In fact, another guest in the morning also was very positive when it comes to Phoenix Mills from the real estate pack. But moving on to the segment that we have, that is stock of the day, Thyrocare Technologies. Now, it is strong second quarter numbers. It has cooled off now as we speak at the day's lowest levels as well. But what's interesting is the kind of run-up that it's given to investors as well. Let me head across to Varsha as to what's really worked for this counter. Varsha, over to you.
Well, thank you so much for that. Indeed, a very strong set of numbers that the company has seen. Let's, pull up what are the key highlights of Q2 FY26 and what were the growth drivers behind this fantastic growth. If you see, the revenue growth that you're seeing is led by 24% growth when it comes to that pathology test, and the EBITDA margin uptick that you're seeing is because of the cost optimization, the change in the product mix, and the operating leverage that that the company has been enjoying too. Well, they've also processed 53.3 million tests, which if you see the growth, it's almost 21% year on year. While they've also approved a bonus issue in the ratio of 2:1, and they've opened 4 new labs in H1 FY26. Also, the net cash, if you see, stand at around 190 crore. Now, onto the numbers, if you see, net profit is up 80%. I also want to talk about the margins. If you see, there's a good spike when it comes to EBITDA margin from 27% to 33%. We want to see that number to 38 to 40%, because there was a time when company used to enjoy such high margins at 38 to 40%. Well, onto the test perform, if I were to talk about, there was a growth of almost 21%, while the revenue per test there, if you see, the growth was around 2% overall. And onto the revenue per patient, if you see, there was growth of around 10% overall in Q2 FY26. We also spoke with the management. Let's see what are the key takeaways, what management had to say to NDTV Profit, what they say, that margins were driven by better product mix and operating leverage. Also, the growth, if you see, was primarily supported by higher volumes, because if you see, Thyrocare doesn't even believe in the price hikes, and they also said that there's no room for further price increase in the upcoming quarters. And also the specialized products, if you see, will be the key growth driver ahead. In fact, they want to double the contribution, because now it contributes only to a single digit. They want to double this contribution when it comes to medium term. But as I said, we spoke to Mr. Rahul Guha, who's the managing director at Thyrocare. Let's see what he has to say.
Growth solves everything, right? And when the company is growing at about 22%, operating leverage plays out, your volume negotiations with your vendors also play out very well. So I think all of this is an outcome of the growth numbers that you see as our business has been growing. Our pathology business has grown 24%, mostly driven by volume. And that obviously has consequent impact on the P&L, both in terms of your cost structures as well as operating leverage. So I think that's what's playing out, and that's what you see. We've been growing at 20%. Actually, on a CAGR basis, if you take out COVID and the API business, we've been growing 20% CAGR for almost 4 years. And what you're seeing right now is the operating leverage play out.
So operating leverage is what is playing out. What's interesting is that the stock actually sold to gains of almost 16 to 17%, hit a 52-week high in today's session as well. And I was just reading an interesting note by ICICI Securities. Now, clearly, if you talk about the kind of target price that they're sitting on, they're looking at something close to little upwards of 1600 or 1560, on this counter. Kush, your view, I mean, ICICI Securities has a target price of 1,560 on the counter. How soon do you think our chart's going to support it? Number one, and if not a Thyrocare, anything else that you would like from this space?
So, Hiral, if it wasn't for this move in Thyrocare that's happened today, I don't think we'd be discussing this stock or even this entire sector for that matter. You look at Vijay Diagnostics, you look at Metropolis, you look at some of the big names, that I just mentioned, including the Dr. Lal Path Labs. They have gone, south for the last, month and a half, and how. So we wouldn't generally be discussing it. So I wouldn't really have a pick per se in this sector, because the entire pack is not doing well. As I said, Thyrocare's move today is a standout, and even that, if you see, has not been able to sustain, at the higher levels. The volumes have spiked, obviously, because of the event. But other than that, 1400 was a resistance. It did cross that today, but not been able to sustain above that. So my suggestion would be, if you had a position in this, it's a good idea to take some money off the table, exit, look at some of the other sectors, especially financials, which are doing well, and perhaps trade or invest in some of those names. So yeah, not sure when ICICI's target would be achieved, but I wouldn't really go big on trading in Thyrocare.
Right. So that's the view coming in when you talk about the diagnostic space as a whole. But let's quickly slip into a short break. On the other side, we'll focus on the IT sector with Persistent, Cyndm, and Tech Mahindra, which has reported numbers. So please stay tuned.
the NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new
Welcome back to India Market Close, and interestingly, looking at the market still near the day's high levels, we see Nifty that's almost, you could say, trading almost 0.7% up in the day's trade. It's comfortably above the 25,200 levels, and also Nifty Bank, strong support coming in and a better technical setup as well. Also the IT space, which is in focus, and let's focus on the two stocks in this space, Persistent Systems and Tech Mahindra. Both of these companies came out with their Q2 numbers, and decoding important questions for these two counters is Jasmeet here. Good afternoon, Jasmeet.
Well, right, very good afternoon. Let's quickly start with Persistence first. While if we look at the overall results, it has been a good set of numbers for the company. Now, let's quickly understand what has worked and what's the positive uptick for the company. Starting off with, we see that lower software licensing cost is something which has aided the margin in this particular quarter. We also see that a broad-based growth was seen across vertical and geography, which is again a positive. While also the street is positive on the back of the soft guidance management has guided for FY26 and FY27 as an aspirational guidance to increase the margins by 100 basis point in this year and further 100 basis point in FY27. Now, while margin management also restates their 2 billion margin, 2 billion revenue by FY27. Now, if you look at the overall TCV, even they have been highest for this particular quarter, showing a good momentum in terms of client deal booking. Now, let's quickly understand what the brokerages are making out of the results. Firstly, we have JP Morgan, which they maintain overweight in the system, and they also hiked the target price to 7,400 from 6,500 earlier. While what they see is they see confident of growth momentum going forward. While they also make a note of TCV to be the highest ever in this particular quarter. They increase their revenue and EPS guidance while they see a broad-based growth as well. While next on my list is Nuvama, which has maintained again a buy on this particular company with a hike target price to 7,000 rupees from 6,600 earlier. Now, what this says is they see a strong margin performance, and going forward as well, it's been maintained. While they also make a note that margin improvement was driven by lower cost and FX tailwinds, while they see improvement in demand pipeline across the verticals. So a net positive for the company.
Well, Jasmeet, what will be the way forward for Tech Mahindra? Of course, the numbers recently came and the numbers were on the decent side, and AI investment is something that's the new buzzword also coming in. But going ahead, what do we expect, coming in from Tech Mahindra's counter?
Well, in terms of Tech Mahindra, we see a mixed set of numbers. On one side, we see the margin have expanded and done really well as per the street. But on the other hand, we see a profit downtick. While we also get a weaker guidance from the management, that's why the stock is in negative today. Well, if we look at what's the way ahead for FY27, the growth is likely to be muted. And we also see that the turnaround progress still continues. Though we see that the margins have expanded, but it's still difficult for management to maintain that margins going forward. While the margin expansion has aided the cost on the back of the management program to increase and reach the 15% guided range by FY27. But on the other hand, we see the street penciling in that to be a very optimistic figure, and they are penciling in margin to be anywhere between 13 to 14.4 for FY27. Well, we also make a note that the revenue is lagging compared to the overall IT pack for this particular company, and we also see the street has been divided between buy and underperform for this stock. Now let's quickly understand what are the brokerages penciling in. We have Jeffries on this, which has maintained an underperformance, while what they say is the target price maintained for this is 1270. Now they say that the risk is rising for this particular company, while they also say that company does not see a sharp uptick in FY27, while they see a slow growth on the back of increased wage hikes that's going to impact the company going forward on the back of H1B visas as well, while they also see a better FY26 compared to the COVID levels, while they expect the margin to reach 13.2% by FY27, whereas management has guided a margin of 15%. Now we also have Nuvama on this, which has maintained reduce. What they see is they have also hiked the target price of 1350 from 1300 earlier, while they see 12% margin level is still lower on a 5 and 10 year average, while they also make a note that the headcount has increased, showing that the business is increasing for the company. So a net mixed set of numbers and results for this particular company.
Well, a very interesting take, and broking community still does seem a bit confused because there is some bull case scenario and bear case scenario both coming for Tech Mahindra. But yes, the stock is down trading in the red. Earlier, Jasmeet had actually mentioned about Persistent Systems also and how their earnings have actually panned out. Stock is up almost 7% in the day's trade and it's holding its levels in the day's high levels. But in fact, earlier today we spoke to Vineet Teredesai, the CFO at Persistent Systems, about the margins for this year, given the wage hike impact seen in the third quarter. Listen in to that slice of conversation.
So, see, if we look at our first quarter, we delivered a 15.5% EBIT margin. This quarter, we delivered a 16.3% EBIT margin. We have said that we have rolled out effective October 1 increments to all our employees. The impact of that is going to be around 180 basis points that you will see in Q3. But we have a couple of levers, like we believe our utilization can improve a little bit. We have our ESOP costs that will go down a little bit. We continue to increase our offshoring and nearshoring on some of our customers in both banking and healthcare life sciences vertical, as a result of which is a margin lever for us, without compromising on the business, without compromising or losing any of the wallet share with these customers. And last but not least, we also have been investing quite heavily in the SG&A part for the last 2 years. While we'll continue to make those dollar investments, the pace of investment may not be at the same level. And that is something, these are the levers that are available with us. We believe at this point of time, out of that 180 basis point impact that will have on the margins, around 80 to 100 basis point of impact can be actually offsetted. On terms of the trajectory, we had said 2 years back that our margins will improve as we reach FY27 $2 billion target. We want to improve our operating margins by 200 to 300 basis point. At that point of time, our margins were in the 14 to 14.5%. Last year, we delivered, for the full financial year 25, we delivered 14.5% operating margin. This year, if you look at our trajectory, we are already at 15.9. So we believe that 100 basis point improvement is already on the way. Despite of some of the headwinds which I talked about in Q3, we should still be able to recoup most of that wage increment impact. And our margin trajectory will be still in the range of 100 basis point higher than the last year. And as we exit the year, we would like to come back to where we have reported our margins this quarter. And, then look at forward. So the 100 to 200 basis point improvement in the margin trajectory is very much on track. At this point of time, looking out our growth, order book, and the pipeline that we have in hand, we believe our 2 billion journey is also possible. We have grown in the last couple of years by 25% on a CAGR basis. This is our 22nd consecutive quarter sequentially where we are grown, and we are confident with all the pitches and the playbook we have, we should be able to reach the 2 billion target without any hassles.
Well, yes, interesting take coming from the management as well for Persistent Systems. But Kush, mid-cap IT space, this is a very interesting space. Of course, big tech IT companies, they are having their own issues as well. But the numbers overall seem okay. In the mid-cap IT space, Emphasis is up 2%. Coforge is also up 4%. If you want to just give your views, if I give you three options, Persistent Systems, Emphasis and Coforge, where is the risk-reward ratio favorable right now?
So I think I'll start with a line that you mentioned, which is the street seems to be confused on the IT space. I think you mentioned tech. I think Tech Mahindra. I think the entire street seems to be confused on the IT pack in general. 33,300 on the index on the lower side and 36,300. So it's largely spent a lot of time from the last 4 or 5 months within this range. Some green shoots here and there, but not a sustainable rally. Now, to answer your question very specifically, what do I like amongst this space? I would start with Coforge. The stocks had a good run, most of the resistance levels taken out, and it could head higher to about 1825 and 1900 odd levels. So that would be the first pick. Second one actually would be Emphasis. It's seen consolidation, but you're starting to see some green shoots where the volumes on the downside are starting to halt, and the stock could make a move towards 2850, 2900 and higher levels as well. Persistent also I like. Good run, good move today on the back of the news. However, there's a minor falling trendline resistance at 5,800. So once it is in the clear of this mark, which is 5,800, you get a closing above this. I think the zoom to 66,000 and 6,200 will be much quicker. So there you go, Coforge, Emphasis, and then Persistent.
Well, yes. So these are the important stocks which Kush will be looking at, and important numbers coming, and of course the mid-cap IT space looks attractive in current levels as well. Okay, let's take a quick break. Stay tuned to NDTV Profit. I will be getting you important previews, especially from Axis Bank, just after the break.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is
Welcome back. You're watching India Market Close here at NDTV Profit. Now, the banking name that is going to be in focus today is going to be Axis Bank, because it is set to announce its second quarter numbers. And Vishy joins us to tell as to what is the street expecting from company's Q2 numbers. Vishy?
Is the largest bank in the pack announcing its results today. Of course, most of the other large banks are coming out only on Saturday. So if you were to look at what the expectations are, net interest margin, that's where the expectation is that there's going to be a contraction in the net interest margin further, down by about 25 basis points. That's about 3.6% for the current quarter. This is largely also going to show up in the profitability of the bank. You will see that the profitability is lower than last year, down roughly about 14% year on year. Part of it is because of a lower core income. Net interest income is expected to come in lower than last year. But apart from that, you're also going to see a spike in provisions on a year-on-year basis, as well as other expenses, which is all going to add to the profitability impact. Now, if you were to look at the advances and deposits growth, that's it's showing that the bank is likely to show about 10% advances and deposit growth, which not great, not bad, sort of in the middle of the pack, much like what Axis Bank numbers typically are like. If you were to look at the slippages scenario, there again, while overall slippages will likely be lesser during this quarter on a sequential basis, you will see a slight spike on the net slippages side. The net slippages are going to go up primarily because of unsecured credit. The reason slippages are coming lower on a gross basis is because last quarter, if you remember, the bank had changed the way it calculates NPAs, and that's why there was a spike in bad loans and thereby a spike in provisions. So on a sequential basis, you may see things improving a little bit. However, on a net of recovery basis, you will see that slippages might slightly go up. Similarly, on the net interest margin and the credit costs as well. So overall, sort of a lukewarm set of numbers that are expected out of Axis Bank. However, we'll keep watching over it. The expectation is that in about an hour or so, you should see the numbers hitting the exchanges now.
So just near the closing of markets is where we could expect Axis Bank numbers coming in, and lukewarm set of numbers is what the street expectation is, and I think that's kind of being penciled in the counter as well, trading around 0.9%, 0.8% lower as we speak. And you know, at the very right moment, we've got Sameer Dalal from Natwarlal and Sons joining us now, because he loves to track banks for sure. Sameer, your view with regards to where Axis Bank is concerned, and I mean, what are your expectations as to how Q2 could be for Axis Bank?
So Q2 will definitely be better than Q1, right? In Q1, they had that technical provision and the write-off that they had to take because, you know, the change was done, which your person previously speaking described, for the way they report the NPAs, whether they're SMA 1, SMA 2 or SMA 3, and then the provisions henceforth that they have to take on that. So that will obviously not repeat itself and numbers will be better. But you got to remember that we've gone through this rate cut cycle where they've had to pass on the interest cost benefits that the RBI, I mean, you know, because of the MCLR, they had to pass it on. But the full cost benefit for them has not come, because their deposits, which have certain maturities, or their loans that they've taken, or, you know, bonds that they issued have certain maturity, will only start coming down post the maturity. And usually that takes anywhere between 9 months to about 18 months. So we believe that NIMs will be a little bit under pressure, but then that is, you rightfully also said, is penciled in at this point of time. With provisionings being lower, we can expect profits to be relatively good. Net, what I think everyone is going to focus on is now, what is the way forward from here for Axis Bank? Will the growth be at this 10% range, or will they be able to push it up, and which are the sectors that will be driving it? For me, the downside to a large extent is already done with. You know, post the results, you might see a small dip here and there if something were to come up, which was a little unexpected. But otherwise, I think given where the valuations stand, for me, Axis Bank is a buy. Not expecting too many negative surprises or positive surprises from this result. I think you'll start seeing the positive surprises Q3 and Q4, where they do a little bit of the write back of these technical provisions that they've had to take. And once that is there on the books, then suddenly I think the stock will probably re-rate.
You know, before I take a question with you, Sameer, in terms of what's happening with the PSU banks, let's just quickly address what the RBI has come out and said when it comes to the rupee. They've said that the rupee is under speculative attack and they will intervene going ahead as well. In fact, RBI may be unveiling to let rupee breach record low versus the dollar. This is an interesting comment that's coming in from the RBI. They are saying that it is under speculative attack and will intervene further. This is what sources are indicating to Bloomberg. Let's just quickly pull up the Indian rupee and see what's happening on that front. 88.12 is what you're tracking so far. So this is going to be an interesting development to watch out for. But Samir, very quickly, if you have to look at the PSU banking space as well, a lot of buying interest that's coming in today's session. We've spoken about Axis. Would you be a buyer of the PSU banking space? Because that dichotomy between the private banking space and the PSU banking space has been evident in the markets since quite some time right now. How are you looking at that aspect?
Yeah, so I would also look at the PSU banking space. We've always said that there's nothing wrong in PSU banks. They're getting their act together. There's always a little bit of risk that remains that they, under some pressure from the government, may give some agri loans or some certain unsecured SME loans because the economy is going through a difficult phase and the government requires, certain actions to be taken, which then eventually come into the books as NPAs, further down the line. But I think we are very far away from that situation at this point of time. They've got their house in order, the NPAs are down, the provisions have been made, it's now recoveries are ongoing. So things are looking good. Valuations, when you compare to private sector banks, are much cheaper. For some of them, not all of them, like Indian Bank is quite richly valued. Bank of Maharashtra is quite richly valued. But some of the others like Can Bank, Bank of Baroda, PNB are still trading at a discount. SBI is trading at similar valuations as that as Axis Bank. So, these banks probably could move up by, the ratings could probably move up by 10 to 15% over the next year. Plus, you have the growth that they could get because of their reach, the deposits that they could garner because of their reach, the growth in loan books they could get. So all of these will bode well. And I think there is upside potential for a lot of them. For me, the top pick at this point would be Canara, followed by Bank of Baroda. PNB would come third. And then, of course, there are a whole bunch of them, but then you can't keep going down the value chain. So I think it's better to stick to the top 2 or 3.
That's with regards to where some of these PSU banking names are concerned. But Kush, anything in this PSU pack that is looking attractive on the charts right now? And of course, a view on Axis Bank as well.
Sure. So let's start with Axis. I mean, the stocks had a good run, early September, and it's now consolidating. You see the last 7 sessions, it's seen some profit booking from that, 1224, 1220 mark, but it's on the back of low volumes. So yes, if the 1150 support zone is intact, this rally could again continue after a brief pause. And, this has come after a consolidation of 2.5, 3 months. So I would be keen, of course, because there is an event lined up, it's best to buy once the event is over. So that's the view on Axis. As far as PSU pack goes, I think Samir and I have a common one in Canara Bank. The 130 mark, which is proving to be a minor hitch, is being tested once again. Once that is cleared, I think 136 and 141 kind of levels also very much come into play. And one other stock that we like in this space, which is a lot less discussed, but has done phenomenally well, is Indian Bank. It's now starting to see some consolidation, but that's when you want to enter a stock, right? When it's consolidating before it gives you that big breakout. So I think, on this one, 795, 920, 725, 820 levels, very much on the cards. Support zone for this one comes in at 745. So if I did have a position or initiate one, I would keep a stop loss at that level.
Okay, so that's with regards to where some of these PSU names are concerned. But with that, viewers, it's time to slip into a very short break. But we'll be right back, bringing more elements like bull versus bear on the other side. So do stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely. You can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new
Welcome back. You are watching India Market Close at NDTV Profit here, and moving on to our special segment, Bull versus Bear. We are having ICICI Lombard in focus. The stock is up more than 8% in the trade today on the back of a strong Q2 numbers. Vansh joins us with all the details. Good afternoon, Vansh.
Good afternoon, Sharad as well. So, firstly, let me start off with the bull case scenario. Now, in terms of Q2 performance, what we have seen that the profit has beaten the street estimates due to the higher other income that has come in. Also, if I talk about the bear case scenario, now this has been on the back of the strong, weak underwriting performance. Now, this implies that the core, this implies that the performance from the core operations has remained weak for the company as well. Moving on, what we have seen is the Morgan Stanley is expecting a 13% growth from their gross domestic premiums as well for FY20 for the second half of FY26. If I talk in terms of the bear case scenario, what we have seen that the GDPI growth has remained flat in Q2, and this was largely dragged by the motor segment and health segment as well. Moving on to the Jefferies, now the Jefferies expecting lower combined ratio from the December quarter to come in. However, in terms of the bear case scenario, what we have seen that the competition from PSU insurers can hit the profitability for this counter as well. Lastly, if I talk about the volumes, now the H2 volume growth is expected to be higher due to the GST reforms that can kick in. And also, if I talk about the bear case scenario, what we have seen that the brokerages is not very comfortable in regards to the valuations for this particular counter as well. So this is how the overall picture is panning out for ICICI Lombard as well.
Okay, so that's ICICI Lombard. In fact, let me ask Samir. Samir, would you be with the bull case or the bear case on the ICICI Lombard? Because over 8% kind of a move today at the day's highest levels. Does it still warrant the upside further?
If you have a 3-year view, I think it definitely warrants further upside. The problem is in the short term, what could happen, right? For me, the insurance market has a huge amount of growth opportunity. And if you remember, on your shows, I've spoken many a times when it comes to the insurance. So compared to a lot of the pure health plays, I like companies that are doing this, entire general insurance basket, because then they get not only the health opportunity, but autos. They also get, fire policies, home policies. It's an entire gambit, and India is still at a very, very underinsured kind of a place. The opportunity to grow the premiums is significant. What they need, now that we've been in existence for so long and they've got their pricing right to some extent more or less correct. So once they can bring their claims to premium ratios down, the CD ratios down, I think what you will see is profitability increasing. And the other income side, the investments that they make, obviously if the markets do well, will do well. So they can report these profits, and then of course their total book of investments is also quite large. So I do like ICICI Lombard from a 3 to 5 year perspective. In the near term, after an 8% rally, would I go out and buy it right away? Probably not.
Okay, all right. So that's the view with regards to where ICICI Lombard is concerned, but clearly at its day's high point right now, up 8.4%. So that's with regards to where ICICI Lombard is concerned. But you know, we've been talking about this, the kind of rally that we've seen in gold and silver. In fact, you know, yesterday, Hiral, I was talking to Titan's Jewelry CEO as well, and I was asking him whether this channel checks that are suggesting the kind of you know, shortages in gold bars, is that even a thing? And he said that yes, it's possible. You know, he said we really hope that we don't go that way, but it is happening despite of the kind of rally that we've seen in gold and silver as well. And just to understand as to how, you know, going forward will this momentum sustain, and what are the fundamentals that are supporting this, we are joined by Manav Modi, the analyst of precious metals research at Motilal Oswal Financial Services, joining us now. Manav, hi, a very good afternoon to you, and greetings for the festive season to you and your family as well. My first question to you, and this is a very obvious question that I'm sure you'll be getting a lot these days, is whether this kind of momentum that we've seen in gold in the past few months, is not few months, in fact more than that, is that really sustainable now?
Yeah, first of all, thank you for having me, and wish you a happy festivities to you and your viewers. Definitely, gold and silver are the limelights as of now when we talk about an asset class or an investment, because any you know, asset moving more than 50-60% is somewhere the talk of the town, and that is what we are witnessing. And more so because what you mentioned just before the question, the shortages is a big issue when we talk about silver, especially. Gold not so much, but silver, the industrial as well as the physical demand is what is you know, keeping the you know, overall supply demand balances in you know, off check, so as to speak. So there are a lot of you know, fundamentals simultaneously working to push both gold silver higher, lot of tailwinds, so as to speak. No major negative factors are turning out as of now. Definitely, if we see physical market for silver is more than 15-20,000 rupees, when we talk about any Sarafa or a Zaveri Bazaar, ETFs are running at 8 to 10% premium. Exchange prices are currently at the right prices from the where parity checks are. So I think the overall fundamental story is still looking very you know, bullish and positive.
Okay. Manav, you're talking about a bullish and positive view when it comes to gold. Simultaneously, let's look at silver as well. And how sustainable is the rally going to be from here on? Because the last time when we saw silver hit that 73,000 mark, after that rally, it actually halved to nearly 35,000. Now, this is not something which is backed by any fundamentals right now. How would you then look at both these asset classes? You know, I mean, how sustainable is this going to be?
Definitely, it's a valid question, because a 70% gain YTD is a very huge number in terms of gains or return. But if we just talk about two previous peaks that you just mentioned in 2011 and 1980s, definitely those peaks were backed by a Hunt brother move and a hyperinflation or QE. So those peaks were, you know, missing a lot of fundamentals which are currently present in the market. I think along with the geopolitical and the tariff and the overall US shutdown fears, we have a strong industrial story which is picking up. Globally, 3 to 4 mines are, you know, shut, where strong supply cuts are anticipated. So a lot of these factors are working simultaneously to keep the prices well supported. Definitely, technically, $50 is a strong levels. We are well above the same. I think once the premium eases off, we could see some pressure, you know, on prices, but I think those pressures will be profit booking, because if we see a 70% move and a 10% correction, I don't think that's you know, a trend reversal, but a healthy correction for further move on the higher side. So I think till the time we don't see 2 or 3 pieces moving on the opposite side, the overall story will continue to remain.
Sharad, this side, of course, we're looking at your precious analysis as well, but I want to know your precious numbers. What would be the key levels to actually watch out for Of course, for gold, if you could just give us the domestic levels which you are looking at, for short-term basis as well, domestic as well as international, and silver also. What would be the key levels which one should actually watch out for?
Yeah, I think if we talk about gold, definitely we are somewhere around above $4,000 on the COMEX or the international front. We feel 40 to 50 is an immediate level which should, which is around 1,28,500, 1,28,000 rupees. If we assume USDN at the current levels of 89. But on the silver front, definitely we feel that silver could have some correction, some profit booking. But by the 1 year or a long-term target, $75 is where we are looking at. On the domestic front or the rupees front, we feel 2,30,000, 2,35,000 is where we are. So 40 to 50, $4,500 on COMEX for gold and $75 for silver is where we are looking at from a medium to long-term basis.
Okay, Manav, thank you so much for giving us those insights, and those are tall targets, $75 for silver coming in. Interesting, and it'll be a wait and watch for sure, because in the past, couple of years, but in the past few years, we've seen silver touch that $50 mark, but bounce back to the teens level. But this time, analysts are expecting that it will not bounce back, bounce lower to the mid-teens level, but probably see a momentum from here on as well. But with that, let's slip into a very short break. On the other side, we'll get you what are the brokerages saying about SRFs. So do stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together.
Welcome back. You're watching India Market Close now. Some of the brokerage notes that we need to highlight. In fact, you had Sharad who actually picked up an antique on SRF as the brokerage of the day at 9:05. Varsha joins in with further details. The stock has cooled off slightly, but still seeing gains of nearly 2%. Varsha, over to you.
Well, thank you so much for that. 14% is the upside potential that we are speaking about from the current market price. And let's see what Antique has baked in when it comes to financials. So they're expecting revenue and PAT growth of around 15% and 35% for the next few years. And overall EBITDA margin, if you see, is expected at 23% by FY28 from 19% in FY25 currently. And especially specialty and fluorochemicals is expected to grow at 18% and 20% respectively. What are the growth drivers behind this financial aspiration? If I were to talk about, the specialty chemicals will actually continue to dominate the key growth engine when it comes to SRF, and also strong global agrochemical recovery is what we are seeing, and that's also reflected in the volume growth that the company is being seeing. Although the refrigerant prices will remain high, this is one of the reason, one of the growth driver that the company has, will also provide additional earnings aid when it comes to SRF. Lastly, on the capex and expansion, heavy capex is planned when it comes to their chemical division, especially their packing film business as well, and they're also expanding into specialty fluoropolymers and aluminum foil when it comes to packing, where the capex has been driven too. So overall, if you see the specialty segment, the fluorochemical segment and the refrigerant gas segment are what some of the growth drivers when it comes to SRF is what Antique is betting on.
Alright, so that's the view with regards to where SRF is concerned, but the HDFC AMC numbers were flashing on your screen just a minute ago, and overall the net profit is down by about 4% odd. The total income is down by about 6% odd, but I think what the street is enthused about, we've seen a slight uptick in trade as well, and this is because it's announced a bonus of 1:1 ratio. Is what we're looking at. Kush, any quick? I'm not sure if Samir has seen the numbers, but I mean, before I go on to Kush, Samir, did you have a chance to take a look at the numbers for HDFC AMC? Any quick view?
No, actually, I haven't looked at the numbers, but what I can tell you from what you read out, even if the profitability and the profitability is a little bit down, don't worry too much about it, because that would have to do with the other income, which is your investment income. You see, the markets have not really delivered any returns, and they also invest in their own funds, and they invest in debt and all of those products. What you should focus on is what the core earnings are. And given the fact that the entire mutual fund industry is continuing to collect money, even during these bad times, they're not seeing redemptions and the SIP flows are growing. I only believe as the market turns around and starts moving up eventually, maybe 6 months down the line, not only will you get the further fund flow growth, but also as the funds grow in value, you start charging a higher, you start the same percentage, but you're charging it on a higher total value. So the operating leverages play out even better. So we believe that this is a sector to be invested in. I haven't had a look at the quarterly numbers, but if the profitability is down, I can guarantee you it's because the other income, that is the investment income, has not come in at the same level that it did last year, where the markets had seen a huge run up.
Well, interesting take coming in from Samir on the HDFC AMC counter, and of course 2 days ago we had mentioned in NDTV Profit as well that what are the reasons why AMC area is bullish as well. Of course, let's take a short break at India Money Market Close, and after the break we'll be getting important technical and fundamental calls as well.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is correct advice, correct information.
Welcome back to India Market Close, but let's get in Shivangi Sardar, analyst, equity derivatives and technical at Motilal Oswal. Shivangi, welcome to the show. Good levels we're watching out for in today's session. The momentum seems to be pretty positive. Your VIX is also slightly lower, and that probably is giving some bit of comfort to traders. What would you advise in terms of strategy for Nifty and Bank Nifty? Because it's the PSU banks which are really seeing a good move today.
Yes, very good afternoon, Peter. Thank you for having me. So we've seen that festivity can be seen across the charts in the market. And we've seen that, for that matter, Nifty has seen pockets of buying, but overall banking stocks have been the lead drivers in this entire rally. Now, we are looking at buy or decline strategy itself for Nifty, and we're looking at 25,500 immediately and then 25,600 marks for Nifty with the support near 25,150 levels. The momentum and the festivity cheer is to continue over here. Now, we've seen that put call ratio is also sustaining above 1, along with, stabilizing India VIX, which is kind of, supporting the entire market. Now, India VIX is down by 5.5% today as we speak. And we've seen that put writers have not shifted their base, which indicates that strength is there and support-based buying is intact. So this was the view on Nifty. Now, talking about Bank Nifty, we've seen that this index, of course, has seen the outperformance, and it has been one of the drivers in this entire rally in the last few sessions. And clear outperformance can be seen. We've surpassed all the immediate hurdle levels as well, and we're looking at 57,000 immediately and then 57,250 for Bank Nifty with a support near 56,500 levels.
Well, yes, important levels coming in from Shivangi. Hi, Sharad here. Shivangi, festive season greeting to you. But what would be the 2 picks you have for our viewers at NDTV Profit?
Absolutely. So first up, festivity has been showing, and season's greetings to all our viewers and the entire NDTV Profit team. We have seen that the banking and the NBFC related counters have seen quite a lot of outperformance, but here, from the last 4 sessions, we are seeing insurance stocks also step up and contribute. So my first pick would be SBI Life. This stock has seen a consolidation in the last 2 months, and it has come out of its consolidation in the pole and flag pattern formation, and it's made a very strong base near 1750 odd levels. It has started to make higher top, higher bottom as well. So overall, hints quite a good, up move for this one. Now, of course, October series had good set of rollovers with long build-up and the kind of consistent growth that is seen in premium income in the company is also like a steady improvement for a good investment pick right now. So this could be one of the top picks, and we are recommending a buy here. Now, next targets that we're looking at for SBI Life is around about 1920 levels with a support of 1800 levels.
Okay, so that's with regards to SBI Life as well. 1800 is what you're tracking on that one. Let's get in Pankaj Pandey of ICICI Direct as well. Pankaj, welcome to the show. Always a pleasure to speak to you at NDTV. Overall, if you see in terms of where markets go, the kind of euphoria that's picking up, it's mainly real estate, which is seeing a strong spark today at the day's highest level, 3.5% kind of gains coming in on that front. Anything that you like from this entire segment?
Yeah, hi, good afternoon. Thanks for having me. I think real estate, our sense is that whatever business updates have come out, while it is sort of muted, we haven't seen much of a launches for most of the major players. But I think we are still getting that confidence that second half is expected to be better. So most of the players are expected to meet their key sales guidance for FY26. What we like is, again, players like DLF, something like Max States from the NCR. On the Mumbai side, we like Aditya Birla Realty. And I think besides that, Oberoi is also what we like at current levels.
Well, interesting take coming on the realty space, but also in Profit Intelligence in some minutes, we'll be getting you some more details on the real estate space. But let's move on to the small cap space. Time to put this spotlight on these buzzers. Anushi is here joining us with the list. Good afternoon.
Good afternoon, Sharad. So what we are looking at is a bunch of stocks buzzing on the back of results or other updates also that we are looking at. Overall volumes, if we see of these small cap buzzers, Genesis International right at the top, over 24 times compared to its 30-day average volumes is what we are seeing. And this is the company making an intraday high of around 20%. Rama Phosphates buzzing on the back of its second quarter results as well. 66 times is the kind of volume that we are seeing compared to its 30-day average. And Keystone Realtors, another stock in focus on the back of the OFS news as well, down about 7%. Now, just quickly walking through what's happening with these companies. Genesis International, the stock is up over 20% in trade. But if you look at the 6-month chart, it's seen about a 15% of a downtick, and 1 year about 25% of a downtick. No fundamental drivers in place, but just a quick recap on the company. It's in providing geographical information services, which pertain to remote sensing, data conversion, as well as photogrammetry is what we are looking at. Now, do note, Rama Phosphates, a stellar set of numbers is what we are looking at. Revenue up around 17%, but it's the margin story which is important to track. 11% as compared to 5%, and this is reflected in the net profit also. More than a 460% of a jump is what we are looking at. Now, coming to the last one in focus is Keystone Realtors, which is in focus on the back of its OFS. Now, here the promoters will be selling 3.6% stake in the company, and this would be via the OFS route from October 15 to 16. Is that what we are looking at? If you look at the floor price, that was at a discount of around 8.5% as compared to yesterday's closing price. Again, the stake sale that we are seeing is to meet the shareholder norms also, because if you look at the last disclosure that the company has made in terms of where the shareholding percentage is concerned, that stands at 78%. To get back to the 75% is what we are potentially seeing this OFS taking place. So these are a couple of small cap buzzers in view for you.
Okay, all right. So those are the small cap buzzers that we've also talked about on the small cap buzzer show at 1:30. Shivangi, any of these looking attractive on the charts right now? There's Genesis International, Rama Phosphates, and Keystone Realtors, all buzzing on the back of strong volumes as well, and good moves coming in on all of these counters. Anything where momentum is there to stay?
Yes, Mahima, we've seen good action over here. Both price and volume, has kind of shown off lately. But overall, we've seen that, stocks like, if we talk about Keystone first, we've seen that the stock has been in downtrend from the last 2 months. And we've seen that, somewhere or the other, any, small bounces have been utilized for selling. Even today, we are seeing that the stock is, down by around about 7.5%. So overall, there is some sort of, stability which is yet to happen, because it's broken its important support levels of 570 levels. So till the time it remains below 570, there would be some more weakness and consolidation expected here.
Okay. Shivangi, some other counters that have, really gained from the day's low point, something like a Sandur Manganese, something like a Bank of Maharashtra, Welspun Entertainment, some of these counters have, seen an uptick either in the middle of the trade today or, at the last hour as well. Any of these counters where you think that the charts are strong enough to make an entry right now?
So, out of all the stocks that you mentioned, Bank of Maharashtra is one space which is looking quite resilient, and we've seen that the stock has exactly rebounded from its key exponential moving average, and the kind of volumes that are seen today, it speaks for itself. And we are seeing that, the stock is kind of trading near its day's high and preparing to close near those levels. So definitely this one would be, on radar for the next levels of around 61. With a support of 58 levels.
All right, so that's with regards to where some of these names are concerned, which have seen good gains from the day's low point. But Nestle is another counter that will be in focus tomorrow. Generally, it posts its earnings in the market hours during the day. So, it's important to give viewers a perspective as to how and what can you expect from the Q2 numbers of Nestle? Of course, we track standalone YOY numbers for this counter. Demand recovery is in sight, but overall coffee and palm oil costs are still a concern, and this could probably weigh on the margins as well. Revenue may rise around 5% as per Bloomberg consensus estimate. EBITDA may be flat. Margins at around 23.43% versus that of 23.4 earlier. So largely in line with where they were at Q2 FY25 as well. Net profit, however, as per what Bloomberg estimates are suggesting, could fall around 29%. So we'll have to wait and watch out for as to what happens there. What can you expect? Modest top line growth supported by price hikes in the premium categories is something that you can expect. Gross margins is likely to decrease. EBITDA margins will also decrease marginally on the back of rising prices. Export revenues could grow in mid-single digits. Volume growth likely to be in that low to mid-single digit range is what we are seeing. And of course, in terms of what we'll be watching out for, management commentary coming in terms of demand and material costs, and of course the GST rate rationalization impact. Of course, there will be a near-term impact on the company because of the inventory that they will already have in the previous pricing. But overall, what is the kind of demand uptake that they're seeing because of GST rate rationalization, and of course the festive season kicking in. So this is with regards to where Nestle stands and with regards to what you can expect from the numbers. But Pankaj, quickly I'll come to you on this counter. Nestle will be the first company from the entire FMCG staple pack to come out with its earnings tomorrow and set a tone as to how and what you can expect from these FMCG companies. Your view?
So on the FMCG side, largely the expectation is that it will be a muted quarter for most of the companies. Specific to Nestle, what we are expecting is about 4.5% kind of a revenue growth to about, I think, 5,100 odd crores. So volume growth is expected to be 2% and then margins are expected to be lower by about 85 bips to somewhere about 22%. And so we are expecting slightly better compared to the rest of the pack, but not really great enough numbers. I think Q3 onwards is where we would expect margins to sort of recover for most of the players, including Nestle. So in general, we are not expecting FMCG as a pack to sort of outperform Nifty.
That's FMCG. Pankaj, how are you looking at Axis Bank in terms of earnings that will be reported today post market hours? What is your expectation?
So I think Axis Bank had a very challenging quarter last quarter, and sequentially we are obviously expecting things to be a lot more better. So we are expecting improved sequential performance. Credit growth is again 10% odd. We are expecting that NIM's margin pressure is expected to be there. So NIMs are expected to sort of further decline by 20 odd bips, somewhere about 3.6 odd %. But I think bottom line wise, sequentially things could be better because we are expecting credit costs to sort of decline 20 to 30 bips quarter on quarter. So better quarter compared to what the Q1, what we have seen for Axis Bank.
So that's with regards to Axis Bank. Shivangi, let me come to you with few of the other names. All Cargo Logistics seeing gains of almost 7 to 8% in trade in today's session. Apart from that, you have Bank of Maharashtra. I'm not sure if we've spoken about that one, but that stock is also seeing some strong moves as we speak. What would you advise investors to do? Do you see any momentum play? Because All Cargo right now has actually seen a sudden surge.
Yes, Hiral. So talking about All Cargo, we've seen this stock kind of gain attention right now. And of course, the kind of movement that we've seen today has been abnormal. But the good part is that it is, getting ready to close at the higher band, which indicates that, tomorrow's session might be a strong opening. So overall, this stock is good for a short-term trade, but of course, it's come out of consolidation of many weeks. And positionally, if we talk about it, then it is still forming lower top, lower bottom. So on an immediate basis, one could actually chase the momentum for the next couple of sessions. But overall, positionally, I would recommend a little wait and watch to start accumulating this one. But of course, Bank of Maharashtra, the stock is looking quite positive with the entire sector tailwind as well.
Positive on Bank of Maharashtra, still stay away on All Cargo Logistics. Apart from these names, What else is buzzing in trade? Let's pull up a Muthoot Finance, Manappuram Finance, CSB Bank, IIFL Finance, because these are all beneficiaries of the kind of surge that's happening in terms of gold prices as well. Pankaj, beneficiaries in terms of gold prices, a counterplay there. What's your view? Because the way gold has surged categorically, sustenance obviously becomes an issue, but you have indirect beneficiaries that do come in the names of NBFCs like these. How are you looking at them, and are you seeing any opportunity?
So from a gold financial perspective, I think what we're liking is CSB Bank. The provisional numbers what the company had come out with also quite good. So they have delivered about 30% kind of advances growth. I think they are investing a lot in terms of technology. So while gold contributes nearly 45% of the book, the balance book is still not sort of making the kind of ROAs what they would expect, which our sense is subsequently 1 year down the line will start to sort of change. And which is why we like this bank because gold loan typically in a rising gold prices scenario, typically asset quality concerns don't come at the forefront for any gold financier. So from that perspective, your 45% of the book largely becomes secure, and the balance is what the bank is building up. Though not at the optimum level now, but our sense is that once this investment technology and other branches are done, we'll see better ROAs for this bank.
Well, an interesting development coming in the banking space, but the focus is on the sector of the day. That is the real estate segment. But why is the realty stocks gaining in trade? Is there any value? Let's actually deep dive into it, and I've taken out some numbers from what the street is expecting. And it's interesting numbers to put it out. Of course, the Nifty Realty Index, if you look at it, this year it's down 13% this year itself. So, of course, there is a value emerging in this space as well. Interestingly, festive season launches, that's expected to gather pace, and the next 2 to 3 odd weeks, we'll see some bigger names actually announcing important projects, especially in NCR, Mumbai and Hyderabad regions. Housing finance loans, they are being offered at attractive rates, and of course, it's a decreasing interest rate scenario as well, which augurs well for the entire industry. Property registrations, the recent numbers which we picked out, especially in Mumbai and NCR, these numbers have been strong if we take the Navratri sales as well. So, of course, reality, you see, the overall triggers are properly auguring well for the company. Now, what to expect? Analysts are expecting an important up move of almost 1.35 to 1.4 lakh homes in the festive quarter, and this is the last quarter I'm talking about, the months of October, November and December. Festive season generally contributes 35 to 40% of the annual residential sales, and that's an important figure which we got from the brokers as well. Now let's look at how the stocks have actually performed, why they have been beaten down. These are the numbers you will see. Oberoi Realty is down almost 31%. Signature Global NCR player, that's down 25%. From South, Brigade Enterprises coming in at 24% downtick, and also bigger players from NCR and Mumbai, Godrej Properties and Lodha Developers, they also fell between 15 to 21 odd percent. But we did a check from the analysts where the most number of bullishness is coming in for the next 12 months, and as per the Bloomberg's consensus, Signature Global stands at 61% from their current prices. That's the rise in the target price we're expecting, followed by the South players, Brigade and Soba. We're expecting 35 to 42% of gains in the next 12 months. So, of course, there's a lot of value left in the realty counter, and today we are seeing that value emerging. And as per the brokers, what I'm hearing, it is a basket buying coming in the realty stock. So, the delivery levels will be something which we'll be watching out for. But moving on to our guests, of course, the realty space is in focus. Shivangi, I have a question for you. Where is the risk-reward ratio actually looking good? We can have a couple of names also. But do you think like a significant positional up move can happen from these current levels because of positive news flows? They'll start coming in the next 2 to 3 odd weeks.
Absolutely, Sharad. We've seen the movement have already started, and of course, with this entire space showing outperformance, this one has been one stock which has been on radar. But overall, it has consolidated for a long period of time, even though attempts of recovery were seen in previous couple of weeks. But for the last 2 weeks, it has kind of stayed in a range, oscillated between them, but of course not surpassed above the 400 mark. So 400 would be the next immediate resistance for CSB Bank. But overall, we are looking at, buy side over here. And if it crosses 400, we could see momentum starting.
All right, so these are some of the names that Shivangi is tracking right now. But, with Diwali just around the corner, what is in store for Trent's Westside, and what are the shoppers adding to the cart? And is there a shift in consumer preferences post the GST boost? Listening to a word coming in from Shalina Party herself, the Chief Operating Officer of Trent Limited's Westside brand. Listening. Is there a change in behavior that you've seen so far in the purchasing power of a common man post the GST rate rationalization?
Great question. I think from our trade perspective, what we've seen is a really good September. And as the GST was coming and being announced, a slight slowdown at the end of the month. Interesting, not from the younger generation who are not worried about what's happening in the economy. The younger Gen Z client is shopping like crazy, but maybe the more mature, loyal Westside customer is shopping for cars and high-ticket items. That was where the discount meant a lot more. Because we're an affordable brand, I saw now the pickup come in the last 2 weeks as we build towards the Bali. So a slight shift in behavior, but nothing that is drastic or big in terms of what you're asking.
Interesting. The other aspect is that we've seen as to how, the customer behaving pattern has been changing. The consumer today wants new by the hour, right?
Correct.
What is the kind of change in trends that you've seen in terms of consumption? Because the Gen Z wants newer things every day.
You're absolutely right. And that's been the huge shift in the last 12 months. Newness every Friday is what we're doing, but it's not just newness for the sake of it. Innovation, new product categories, new colors, new denim shapes, and we're seeing that newness really driving a different outcome. And for me, what I'm delighted by is the younger customer is starting to shop Westside. And that was the bit that was really important in terms of our strategy. I think the other thing is also agility in our supply chain. The fact that we are looking at an idea and we're bringing it to market in a matter of weeks. So trialing, repeating, bringing new things, seeing what's working. I think speed in fashion, speed in product has been a huge shift in our business as well.
So it's the Gen Z that's adopting very fast, is that correct?
Absolutely,
or the millennials?
right.
It's the Gen Z.
I'd say the Gen Z is really where I'm seeing the traction.
Yeah.
Millennials is great, steady. What's good about millennials is they're part of the community. We're very much about community marketing, engagement. So where I've seen the millennials come is through our community activities, our 5K runs, our Westness activities, our Zumba classes. That's where I've seen millennials. They want something beyond the everyday working life, and they're connecting to Westside in a slightly different way. So very different customer behavior depending on the age profile.
Interesting. You did mention that you are very fast in terms of changing your inventory. Just want to get a sense as to how are you actually managing or adopting this change in fast consumer behavior with respect to your inventory. Where does it stand?
Well, I think if we don't do it, we won't win in the market. So it's non-negotiable. The teams have been set up in such a way. We have trends, we're using AI interventions, we're looking at our vendors, and the whole speed to market from fabric to design to trend, we can do very quickly, land it, have success and repeat. And I think if we keep doing it, we have pivoted and set up teams in a different way, and we're seeing it make a difference in our business.
Interesting.
Okay, so that was an interesting conversation that Mahima had with Trent, and usually Trent is not a company that speaks often. The stock also, as we playing it at the day's highest levels as we speak, 2.5% up move coming in on a Trent. Pankaj, playing the festive season demand right now, the likes of a Trent, Titan, or for that matter any of the other apparel companies as well. Would you be positive?
So I think, Q2 from a business update perspective is softer for Trent because they have guided for about 17% kind of a growth. And Q1, they already had about 20% kind of a growth. And mind you, the 17% growth is also lower because of the high base effect of last year. Our sense is that things will start looking better for Trent Q3 onwards, because that is when the benefit of the festive season will sort of come in. On top of it, the GST benefits. So from that perspective, I think Q3 and Q4 is where we are more optimistic about. I think Q2 is more, again, is expected to be a softer quarter for Trent. But in general, our sense is that Trent, despite rich valuation, has a long runway for growth because in the value fashion category, this is one of the few players which is making a good amount of money.
Okay, so that's with regards to Trent. In fact, Shivangi, let me talk to you about a few of the paint companies as well. Are you seeing any value emerge ahead of the festive season, or amidst the festive season with the Asian Paints, Berger, Axo, or Kansai Nerolac?
So interestingly, of course, all of these stocks have an impact on the crude oil, but there is one more stock which has kind of directly impacted from the crude oil, is what I'm liking in this festive season, is Indigo. Sorry to shift focus from the stocks that you mentioned, but Indigo is some, one chart structure which is looking quite positive, and it has given a bottoming out structure on the daily basis. Even on the weekly frame, we've seen that it has respected its upward sloping channel. It has kind of resiliently held on even on a year-on-year basis. The stock has kind of moved since inception. From the last 6 to 7 years, we've seen higher top, higher bottom in this one. So quite positive, and this one's looking very good ahead of the festivity and the vacation and the wedding season as well, which tends to do quite well. So 6,100 is what we're looking at for Indigo, with the support of 5730 levels.
Okay, all right. So that's the way with regards to where some of these paint companies are concerned, and good moves coming in on Asian Paints as well today. But with that, Shivangi and Pankaj, thank you so much for taking out the time and of course giving us all those insights, and a very happy Diwali to you and your families as well. Let's try to pull up as to how the markets are closing today. Sharad, at the start of the show, I said that markets are clearly cheering the festive season kicking in, and probably today is the day when, for markets at least, the festivities have kicked in. The Nifty 50 up 0.7%, the Bank Nifty also up 0.6%, Nifty 50 well above the 25,300 levels. The question will be whether this level is sustainable or not, and Mura trading pe what levels are we actually going to see. Let's try to pull up the heat map and see as to how counters are fared throughout the day, largely led by Bajaj Finance and Bajaj Finserv, the two Bajaj twins. Nestle ahead of earnings, up almost 4%, so something's brewing there. There's Trent up 2.6% as well. Asian Paints up 2.5%. So a lot of consumption names in focus. Eternal also ahead of its earnings, up 2%. But something that's remained under pressure includes your auto names like Bajaj Auto, Tata Motors, and your auto names like your IT names like Infosys, as well as Tech Mahindra. Axis Bank also continues to be under pressure. We'll have to wait and watch out for once the earnings come in as to how the numbers fare. But let's try to pull up the sectoral heat map and see as to how sectors have done. Nifty Realty still topping that chart, up 3%. There's PSU Banks up 1.6%. Nifty Mid Cap, we'll talk about that later, but Nifty Defense also up 1%. Consumption and FMCG also doing fairly well. Nifty Media is the only one that has slightly slipped into the red and down by about 0.6%. And quickly pull up the advanced decline ratio before I go on to Sharad for the broader markets. The advanced decline ratio has remained intact. In fact, when we started the show, we were at around 1,500 odd advances. Now we have increased by that 100 number, and now we are around 1,600 odd advances versus that of 800 odd declines, and that strength, Sharad, is being shown in the broader end of spectrum as well.
Exactly, that's the point, Mahima, that the broader markets have actually participated in the rally. Nifty Mid Cap on is almost ending at the day's high level. Even the small cap, that's actually there ending at the day's high level itself. So of course we are seeing a strong strength in the overall markets. Now let's look at the stocks where the actual movement is happening. BSE 500 index we pull out. ICICI Lombard back on a strong set of earnings coming in. Persistent also, the story remains the same. Both of them are up almost 8%. Hatsun Agro, the numbers came just around 20 minutes ago. See the stock jumping 6%. So a significant buying coming in on the earnings trade. And if you look at the losers side, Tata investment profit booking continues for the 2 to 3 odd sessions. And also cement names have started coming in, Nuvoco, Vistas, JK Cement, Star Cement, to name a few, where we are seeing a significant selling happening. Also, let's pull up the other charts from the NSE 250 index as well, where the losers are there. And over there also we'll see the overall, the broader markets over there, we are seeing a selling happening as well.
Right, so that's how the broader end of spectrum is looking like. But just to give viewers a perspective as to what are the things that you need to watch out for post market hours today, and of course tomorrow before the markets open. The corporate actions, of course, Silicon Engineering trading ex-dividend around 0.5 rupees per share there. Companies that will see anchor lock-in exit, Urban Company around 3% and Diffusion Engineers around 44%. In terms of listings tomorrow, Rubicon, a highly subscribed IPO, 85 times overall is what we saw in this counter. We'll have to see as to what listing gains are indicating for this one, and the GMP is very high for sure. Canara Robeco Asset Management also gets listed tomorrow. So 2 listings that we'll be watching out for tomorrow. Today, earnings post market hours, big earnings that you'll be watching out for is Axis Bank and HDFC Life. In terms of companies that will come tomorrow, big names coming in like Wipro, Eternal, you'll have your Nestle also coming in tomorrow, Mastec, Metro Brands, IOB, LTI Mindtree is going to be a big one, Z Entertainment also a big one, because we'll have to wait and watch out for as to what the management commentary is also coming in. So this is with regards to everything that you need to watch out for post market hours today. But with that, we are completely out of time on this edition of India Market Close, but do stay tuned, more news and updates on the other side.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change. A path to renewal. A leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. But first up, let's see how the markets have fared today. So Nifty has settled about 25,300 level. Sensex ends over 500 points, which is up around 82,600 levels. And also about the stocks that have been trading higher today, snapping a 2-day losing streak. The Nifty 50 settled above 25,300 levels, while the Sensex has ended over 500 points, up around 82,600. Now, the benchmark indices tracked gains across the Asian markets. Sentiment has improved on growing bets of a US Federal Reserve rate cut, while easing the retail inflation at home bolstered the expectations that the RBI could actually follow with the policy easing in December. Now let's look at the broader market. So they have mirrored gains of frontline indices. The Nifty, mid-cap and small-cap baskets have ended almost 1% higher. Most sectors have traded higher. Realty is led by the gains with strong momentum, followed by PSU banks and metal, showing a notable strength. FMCG and financial services also advanced, while media was the only sector in the red, indicating selective profit booking in that space. So the market breadth ended highly skewed in favor of the bulls today. Now let's talk about a counter that was buzzing in trade after reporting a good set of numbers in Q2. Now, Persistent Systems has reported a strong second quarter, beating market estimates and also marking its 22nd consecutive quarter of revenue growth. So on a constant currency basis, revenue grew 4.4% quarter on quarter, which is up from 3.3% in the previous one. While the company's order book stands at $609.2 million, attrition remained manageable at 13.8%, which is reflecting a stable employee retention. On the financials, revenue has risen 7.4% to 3,580.7 crore rupees, with EBIT up 12.6% to 583 crore rupees. Now, EBIT margin has expanded by 75 basis points to 16.28%, and net profit has grown 10.9% to 471.4 crore rupees. Now, overall, if we look at, Persistent System continues to show consistent growth momentum and also strong operational performance this quarter. Let's keep it going with the earnings then. So Tech Mahindra posted a 5% rise in Q2 net profit, though it missed street estimates, while margins have exceeded the expectations for the 8th consecutive quarter. Now, constant currency revenue growth was the highest in 10 quarters at 1.6%, highlighting steady operational performance. So the communications segment has seen a slight 2% dip, but the company has maintained stable deal wins during this quarter. So last 12 months attrition stood at 12.8%. This is also reflecting stable workforce retention. Overall, Tech Mahindra has delivered moderate growth with continued margin expansion even amid the sectoral pressures. Now on to another counter that was in focus. Promoters of Keystone Realtors are set to offload a portion of their stake via an offer for sale.
So they planned to sell up to 3.63% of the company with the floor price fixed at 550 rupee per share. This is representing a 10% discount to the current market price. So the total value of the offer is estimated at up to 251.7 crore rupees and providing an opportunity for the investors to actually pick up shares directly from the promoters. Moving on, let's talk about an interesting foray that's been in focus. Ola is entering the energy sector with its first non-vehicle product set to launch on October 17. Now, the unveiling will happen via premiere on the company's social media channels. Now, this is marking Ola's Diwali launch beyond the mobility services. Now, this move reflects Ola's diversification strategy as it expands its offerings into the broader energy solutions market. Let's also talk about the order wins now. It was Mishra Dhatu Nigam which has secured a new order worth 306 crore rupees, further strengthening its order book. Now, the company's open order position now stands at 2,212 crore rupees, which is up from 1,827 crore rupees as of Q1, and this is reflecting a steady demand momentum. For Q2, order inflows are expected at around 701 crore rupees, and this is also highlighting a robust pipeline for the aerospace and defense materials manufacturer. Now, Midhani continues to maintain strong visibility on orders, underscoring its strategic position in the high-performance metal alloys and defense supplies. Cyient DLM has reported a sharp 108% jump in the Q2 of net profit, which is largely boosted by a one-off gain of 19.57 crore rupees. So on a normalized basis, PAT has risen 18.7% to 126 crore rupees, while the revenue has grown 20.2% to 311 crore rupees. Margins have expanded to 10% from 8.1% in the previous year, reflecting improved operational efficiency. So the defense segment has seen a degrowth due to the completion of existing orders, but the overall order book remains strong at 2,291 crore rupees as of September 30th. Next up, we have Thyrocare, which has reported a strong financial performance this quarter. Now, this is backed by a robust cash position of over 190 crore rupees. Revenue growth was driven by the pathology segment, while the margins have improved sharply to 33% from 27.2% year-on-year. Now, this is aided by operating leverage and a better business mix. So the company processed 53.3 million tests, marking a 21% increase year-on-year. And this is also reflecting healthy volume growth and strong demand momentum. Now, in a move to reward the shareholders, Thyrocare's board has approved a bonus issue in the ratio of 2:1. Now, as we can see that Axis Bank has come out with its quarterly results, and if I can just take you through the numbers, their net profit stands at 5,090 crore rupees versus NDTV profit estimate of 5,956 crore rupees. And, net profit is down 26.4% is what we can see right now. Gross NPA stands at 1.46% versus 1.57%. And now we are being joined by my colleague Vishwanath Nair, who tracks the sector there. Vishwanath, what are you making of these numbers?
Yeah, so clearly the provisioning impact is hitting the net profit. If you were to see the provisioning number year on year, it's up about 61%. Remember in Q1, Axis Bank had said at that point in time that they had changed the way that they were classifying NPAs as well as providing against them. And that is why in Q1, they saw a one-time technical impact of those NPAs. However, it's surprising then that Q2 has also looked bad, especially after, if you look at the gross NPA figure, that's actually come in better, roughly 11 basis points better than what was there in the June quarter. Net NPA also remaining largely flat. So the provisioning increase, we need to look a little bit deeper into the numbers and try and find out where that additional provisioning has happened. But apart from that, you've got net interest income actually coming in quite reasonably well. It's not as bad as one would have expected. However, profit impact is a serious sort of a problem. Actually, we have Ashutosh Mishra from Ashika Stock Broking joining us on this conversation. Ashutosh, if you can hear me, sir, what do you make of the numbers, the first cut?
The number is purely like on operational front, they have delivered a good set of numbers. Only this provision part, we need to understand how long it will continue. And we need to look at loan growth and other metrics. What is the plan of management on that front? That will be the key things to watch out for.
So among the disclosures that they've made, about 1230 crore of one-time standard asset provisioning they've made in Q2. I'm trying to figure, is that enough to push the number higher?
That may be case of, yeah.
Okay. Coming to the asset quality scenario there, gross NPA has actually improved 11 basis points odd. Do you think then maybe that technical issue that was there in the first quarter is no longer playing out?
Yeah. So they may have increased the provisioning buffer further this quarter. That can be one of the reasons for this increase, but we need to go into that part of it. But for me, most important things will be what is their focus on the growth front and how they see the NIMs in H2, because H1 we all were expecting NIMs to remain under pressure out there. And as there is one more, at least given the inflation growth trajectory, at least one more rate cut will be there. So how the banks will handle that part that is important to watch out from here.
Let me look at where the advances and deposits are now. Of course, we don't have that many figures available, but the expectation was about a 10% increase in advances and deposits. Are you sure that the bank will sort of hit that figure?
I think so. That I also don't have that number readily available at this point of time with me, but that will be the important to watch out. But and how that, what is the guidance on the bank on that front and which segment they are, that will be the key things to watch out.
Ashutosh, another problem that has been sort of uneven at Axis Bank is also the net interest margin figure. To your mind, how much of an impact on NIM can we expect further because of the rate cutting cycle still not getting completed?
So it will be relatively minimal in the third quarter onward, because impact of the CRR cut will start playing out from the third quarter. And even deposit repricing has been now gathered the pace. So because of that, we will find that performance will on NIM's performance will be far better than the first half of the current year, in the second half.
So the NIM figure, it looks like 3.73%. Is that according to your estimates?
I think, yeah.
Close to what you expected
yes,
on the NIM front. Okay. Any further contraction is highly unlikely because Q3 you will have the impact of
It can be. Some contraction can be witnessed about, but the pace of contraction will be very less.
Oh, okay.
Because there is one more rate cut, so there can be, whenever that rate cut will come, at the next period or next quarter, we may see some further contraction, but the pace of that contraction will be not as high as what we have witnessed in the last 2 quarters.
Ashutosh, also one last point I wanted to understand from you. Going ahead, what exactly will need to happen at Axis Bank for us to see some kind of re-rating on the stock? Because the current numbers look not so great, not so bad.
So that's what growth is very important. The bank has to return back on a growth path, and if they return back on a growth path, then other numbers are not very alarming on as such. But for the profitability to get back on a track post this NIM's compression, for that it is very important that they return back on a growth path. And
understood, Ashutosh. Thank you so much for joining us on this quick call right after the Axis Bank numbers have come in. I'll end the Axis Bank review for now, and I'll call back my colleague Himakshi.
Yes, thank you so much, Vishy, for that and taking us through the numbers, in depth for our viewers there. Thank you so much for that. Now, let's just move ahead with the Market Express viewers. So, we were talking about TCC. So, TCC Concepts has acquired a controlling stake of 95.2% in online furniture marketplace Pepperfry, marking a major consolidation move in the e-commerce space. Now, the stake has been picked up on a fully diluted basis for 659 crore rupees, valuing the transaction at a significant premium in the home and lifestyle segment. So, as a part of the deal, TCC Concepts will actually issue around 1.2 crore shares to the sellers at 557.94% shares, strengthening its equity base. Moving ahead, we have Star Cement, which has announced plans to raise up to 1,500 crore rupees to support its growth and also expansion strategy. Now, the funds will be mobilized through private placement or a preferential shares issue subject to necessary approvals. Now, the capital infusion is aimed at strengthening the company's balance sheet and supporting the capacity expansion and also enhancing operational efficiency across the cement plants. The Indian Air Force is set to acquire 700 Astra Mark II Beyond Visual Range air-to-air missiles, which is a major boost to the country's indigenous defense capability. Now, the missiles with a range of over 200 kilometers will be fitted on Sukhoi and light combat aircraft jets, enhancing long-range strike and interception capability. So the move comes amid a robust defense order book of 22,814 crore rupees for FY25, with a book-to-bill ratio of 6.8 times based on the current revenue levels. So far in FY25, the company has secured new orders worth 6,668 crore rupees. Now let's look at Jefferies, which has kept its hold rating on the TCS with a target price of 3,100 rupees. So TCS reported a modest 0.8% revenue growth in Q2, and it met the expectations. But profits took a hit due to 1,100 crore rupees of restructuring cost. So the company's EBIT margin has held steady at 25.2%, though its headcount dropped by 3% quarter on quarter, and this is reflecting the weak growth in key markets. So Jefferies also warns that TCS new data center venture may not actually add much value to it, and it also cites low returns and high investment with little synergy. So the firm has cut its estimates by 1% and also projecting a modest 4% earnings growth over the next 3 years. Next up, we have ICICI Lombard's Q2 profit has surged 18.1% year on year to 820 crore rupees, and this is beating the estimates. This is actually aided by higher other income. So net premium earned grew 12.5%, and this was also led by strong traction in the retail health and fire insurance. Solvency ratio stood firm at 2.73 times, comfortably above the 1.5 times regulatory minimum, with ROAE improved to 20.8%. However, the gross direct premium income has fallen 1.9%, commissions rose, and also underwriting margins have narrowed. So the combined ratio has inched up to 105% with weaker motor growth and flood-related crop losses weighing on the profitability. Titan has launched its new Mia Manifest jewelry collection aimed at younger customers. Now the range features 14-carat real diamond-studded designs, which is inspired by lotus motifs, paisleys, and also palaces, with prices from 25,000 to 3 lakh rupees. So the Manifest theme celebrates abundance and also indulgence, reflecting innovation and style. Festive demand is picking up post-Navratri with volume growth expected this season. Titan has planned inventory well in advance, now anticipating high demand for the gold bars and also coins, despite rising gold prices and ongoing shortages in the country. Bharat Electronics has promised to complete a new manufacturing unit in Andhra Pradesh by March 2029. So the Andhra government has stepped up, allocating 914 acres of land and approving the project while offering incentives spread over 15 years. So Bharat Electronics plans to invest up to 25 billion rupees in 2 phases to build this defense manufacturing unit. Now this move is set to boost the local jobs and also strengthen India's defense capabilities with homegrown technology. Now it's a big win for both the company and the state. Sources have told NDTV Profit that RBI is closely coordinating with the National Payments Corporation of India to tackle the issues with the new check truncation system. So launched on October 4, the system aims to settle checks continuously, unlike the old T+1 process, but it's facing challenges. So the new setup has created bottlenecks, especially in the public sector banks and also the smaller lenders, which is slowing down the settlements. So the RBI expects that the situation to stabilize soon, with banks working on quick fixes. Now, phase 2 of this system is actually set for January and also promising smoother operations ahead. Let's check the latest vehicle sales data from the Society of Indian Automobile Manufacturers. In September, overall passenger vehicle sales has risen by 4.4% and has reached 3.72 lakh units compared to 3.56 lakh last year. Now, two-wheeler sales jumped 6.7% to 21.6 lakh units, while three-wheeler sales grew 5.5% to 84,000 units. Now, breaking it down, motorcycle sales have increased by 5.8% to 13.73 lakh units, and also scooters have seen a strong 9.1% rise to 7.33 lakh units. So this growth reflects this healthy demand in India's auto market, and this is boosted by festive season buying. Now let's look at some global news. Sri Lankan Prime Minister is set to make her first official visit to India from October 16 to 18. Now this marks a significant moment as she steps into her role, aiming to strengthen ties between the two nations. During her visit, she will deliver a keynote address at the NDTV World Summit in New Delhi on steering change in the uncertain times. With the visit, actually highlights the deep historical and cultural bonds between India and Sri Lanka, with talks expected on trade, investment and cooperation. Now let's move on to some national news, where Goa has lost a prominent political figure, with Agriculture Minister and former Chief Minister Ravi Naik passing away due to a cardiac arrest. A veteran leader with decades of public service experience, Naik held multiple key portfolios and also played a significant role in shaping Goa's political landscape. He was known for his dedication to farmers and grassroots development. He also earned respect across party lines. His passing marks the end of an era in the state's governance. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global
snaps a two-day losing streak, closing above the 25,300 mark. Benchmark slightly underperformed broader market indices. All sectors end in the green except Nifty Media. Axis Bank's standalone net profit for the quarter ending September 2025 is 5,089.64 crore, a significant decrease from 69,187 crore in the same quarter of the previous year. Commerce Secretary Rajesh Agrawal is hopeful of India being able to reach a trade deal with the US and says the Indian team is currently in the US to explore a win-win agreement. 75% of companies coming with IPOs will trade below issue price in the next month, says Sunil Singhania of Abacus Asset Manager in an exclusive conversation with NDTV Profit, adding that he's positive on pharma, metal and capital sectors. The government is working to stabilize freight rates amid global uncertainty. Shipping Secretary Vijay Kumar tells NDTV Profit Shrimi Chaudhary says a scheme to incentivize container manufacturing within India to reduce import dependence is in the works. China files WTO complaint against India's subsidies for electric vehicles and batteries, says they give Indian industries unfair competitive advantage. And the RBI intervenes in the cheque clearing issue. Sources say the new cheque truncation system is struggling to keep up with the pace of settlements. Problems are largely in public sector banks and small lenders. Siam Chairman Shailesh Chandra tells NDTV Profit the GST 2.0 and festive period have together lifted the consumer sentiment and released the pent-up demand, but cautions that the industry might not be able to service the entire demand. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. First up, let's take a look at our top focus this evening. Let's have a look at how the markets fared today. We saw the Nifty snapping a two-day losing streak to close just above the 25,300 mark. Benchmark slightly underperforming the broader market indices. All sectors, however, ending in the green except Nifty Media. But for a more detailed roundup, let's quickly go across to my colleague Varsha, who has all of the details. Varsha?
Nifty snaps two-day losing streak, closes about 25,300 mark. Benchmark slightly underperformed broader markets. If you see, Bajaj, Finance and Nestle are the top gainers when it comes to Nifty. While Nifty Small Cap 250 snaps two-day losing streak, TV18 Broadcast and CESE gains the most. Persistent System and Bank of Maharashtra gain the most when it comes to Nifty Mid Cap 150. Persistent System, if you see, gain over 7% after its Q2 numbers beat estimates. On to the sector indices, if I were to talk about all sectors end green except Nifty Media. Nifty Realty is the top sectorial gainer, gains were led by Prestige Estate, Projects and Sobha. Nifty Media emerges as the top sectorial loser. The fall was led by Tips Music and Dish TV. Nifty Oil and Gas, Auto, Pharma, FMCG snaps two-day losing streak, while Nifty Metal and IT snaps its three-day losing streak. And lastly, Nifty Media, if you see, fall for the second consecutive day.
Thanks for that, Varsha. And let's move on to some breaking news that's coming in right now. Trade talks between India and the United States are gaining momentum, with both sides hopeful of striking a win-win agreement soon. Officials say discussions are ongoing at multiple levels. U.S. Ambassador-designate Sergio Jor was recently in New Delhi while an Indian delegation, remember, is currently in Washington exploring possible areas of convergence. Commerce Secretary Rajesh Agrawal said that both governments are committed to strengthening bilateral trade ties and addressing long-pending issues through dialogue rather than dispute. Now, on the impact of US tariffs, officials put out that several sectors are not facing duties, are seeing steady growth, while industries hit by higher tariffs are working to overcome those challenges. But despite this, India's overall exports to the US remain in positive territory, underscoring the resilience of the trade relationship between both India and the United States. This is the latest that's coming in right now. We'll, of course, keep tracking this and bring you the latest developments. Let's move on now. Market veteran Sunil Singhania, founder of Abacus Asset Managers, said the surge in IPOs reflects the strength of India's entrepreneurial economy. Now, he believes the listings are a healthy sign of growth and innovation. And while on the sector side, he remains positive on pharma, metals and capital goods and mutual fund space, calling them key beneficiaries of India's ongoing momentum. Let's listen in.
IPOs, frankly, is needed in evolving economy because some of the new sectors, new sets of entrepreneurs, you will be able to only invest if the company does an IPO. Having said that, I think what has happened is few things. One is the pricing of IPO leaves nothing on the table, frankly.
Retail investors, and that's
second is there are obviously not all IPO companies are great entrepreneurs. So one has to be careful about that. Third is, as you rightly said, that there is limited information and you depend on what the management presents to you in half an hour, and you take a call of investing 200, 500 crores from a fund perspective in those companies. From a retail perspective, the only reason you are investing is because there is a grey market premium, not because you understand the fundamentals. Exactly. So one has to be very, very careful. My view is that 75% of the companies which are coming out with IPOs will trade below the IPO price in the next 6 months. But there will be a set of companies which will be interesting, where there is merit. More investors have built houses by systematically investing in mutual funds.
That is it.
Reliance Growth Fund, which is now Nippon Growth Fund, till 2017 when I was managing it, grew 100 times in 21 years. That has become now 400 times.
Yeah.
Now I don't see too many stocks which have become 400 times in 30 years. In fact, in Reliance, we had an investor who had put a board outside his house that this house has been made due to investments in Reliance Growth Fund.
Wow.
So for a retail investor, it will be very difficult to pick one stock and say after 20 years it will be 100x, because it might work, it might not work. So you have picked one stock, but there might be 100 which have not given that. And when you are investing in a diversified portfolio, the chances are much higher.
Meanwhile, Bharat Dynamics closed over 1% higher after media reports said that the Indian Air Force is set to acquire around 700 Astra Mark II missiles. The beyond visual range air-to-air missiles will be integrated with light combat fighter jets, marking a major step in India's push for indigenous weapon systems. My colleague Anushi now joining us with more on what this means for the country's defense preparedness and Bharat Dynamics order book. Let's listen in.
Bharat Dynamics is in focus on the back of these media reports that are circulating that Indian Air Force is set to acquire about 700 Astra Mark II missiles that we are looking at. Now, what we are essentially seeing is that missiles will be fitted in the Sukhoi light combat aircraft, along with that fighter jet fleets that we are looking at. So this would be a direct beneficiary of this would be Bharat Dynamics, since it's in the manufacturing of these missiles, along with DRDO, which essentially makes these missiles that we are looking at. Do note that the company has earlier also said that the missiles would reduce dependency in terms of where the foreign imports are concerned. So Astra Mark II, an important milestone, and the 700 of these would lead to an further upscaling in terms of where the company's order book is concerned. Do note that if you just take the current Operation Sindoor into focus also, the Pakistan Air Force had made use of Chinese-developed PL-15E missile. So Astra Mark II is a direct competition to that is what we are looking at. So it is something, it is something that would provide distinct advantage to this particular missile is what we are looking at. If you look at the company's order book, currently that stands about 20,814 crore, which is about 6 times of a book-to-bill ratio that we are looking at. In FY25, they had secured around orders worth about 6,800 crore. So with this order coming in place, we would see a further boost in terms of where the company's order book is concerned. So commentary in terms of that from the company side would be something that we should be tracking by. But since it's the manufacturer of this, it's an important development that we're looking at.
Absolutely, Anushi, an important development indeed. Thanks so much for that. Let's move on now. In an exclusive conversation with NDTV Profit, Shipping Secretary Vijay Kumar said the government is closely tracking the impact of global tensions on container freight rates and availability. Now, he's revealed that a new incentive scheme is in the works to promote domestic container manufacturing. He also added that a maritime development fund will infuse additional capital backing Shipping Corporation of India's ambitious fleet expansion and tonnage growth plans. Let's listen in to a snippet of that conversation.
The issue of container availability is attracting attention at the highest level of the government. And we are looking at how to stabilize the situation in general. And we are working at a scheme on how to incentivize container manufacturing within India itself. And we are in talk with a lot of private players also. We will come out with something very fast on this.
Okay, so some work in progress as far as incentivizing exporters and the ship participants are concerned?
So something is already under consideration. I can't divulge the exact details now, but we will come out with something very soon, because this is, I mean, we have already addressed the shipbuilding part, how to increase Indian tonnage. Now the container part also has to be addressed.
Okay. Sir, I also wanted to understand from you that this entire, the package which you're talking about at this point, Shipping Corporation also has a major role. It's one of the, biggest company in the shipping, sector. How are you going to kind of boost the entire, the fleet services there? Is there any plan, because Minister recently kind of indicated that some capital infusion in work. If you could elaborate a bit that what's the plan, what's in the government's mind?
So basically, I mean, coming back to all the schemes that we launched, they actually address basically the supply side of the shipping sector. I mean, it makes easier to finance your ships. It makes it possible to construct ships domestically. The second part of the spectrum is the demand side of the shipping sector. Where will that demand come from? So how does it relate to Shipping Corporation of India? So basically, we are working on a demand aggregation where all the major cargo owners in the country, they come together. They aggregate their demand of ships over a time period. And already an MOU has been signed by some of these cargo owners with Shipping Corporation of India, where a JV will be formed, a joint venture will be formed, SCI will be an equity partner, cargo owners will be equity partner, and some money will come from the recently announced maritime fund. So this joint venture will purchase these vessels, which will be part of the aggregated demand, and then Shipping Corporation of India will manage and run these vessels. So this model will increase the business opportunities for Shipping Corporation of India. It will also address the issue of increasing the tonnage of Indian vessels, and further it will also reduce the foreign exchange outgo. So this will be a win-win for the Shipping Corporation of India.
Meanwhile, the RBI's new check truncation system launched on October the 4th is facing initial glitches, causing delays particularly at public sector and smaller banks. My colleague Vishwanath now joining us with more on this. Vishwanath, if you could walk us through the details and what exactly is causing these bottlenecks?
Right, so what's happened with this new check truncation system is that there has been a sort of teething problem that's crept in. The new system came into play on the 4th of October. Since then, customers have been repeatedly raising complaints over social media that they have not been able to transfer money using the check system, and that payments have gotten stuck significantly. And this is important specifically for your small business owners who typically see a higher flow of payments right before the festive season begins. So what we've learned from sources is that the RBI is in constant touch with the NPCI over these teething issues. In fact, the large private banks don't seem to have that much of a problem. The problem seems to be concentrated as far as the large public sector banks go, as well as smaller private banks in the system. What our sources are also telling us is that banks are working with a lot of haste to try and fix these issues so that the payments can go through much easier. While this situation is still stabilizing, the expectation is that over the next couple of weeks, it will have fully normalized. Now, remember, this is just the first phase of this new check truncation system where check payments are settled within the same day. By January, the entire system will be geared towards real-time settlement. So the minute you deposit a check with the bank, the recipient has received that money in their bank account. So that's the kind of system that we're moving to. So these initial teething troubles do pose questions about how soon we can move to that system and whether that next phase will also come into play without these issues coming into the picture and whether people can actually make those payments safely.
Right, Vishwanath, thanks so much for that. And let's move on now. A fresh trade flashpoint between India and China has actually erupted. Beijing has filed a complaint at the World Trade Organization over India's subsidies for electric vehicles and batteries. Now, according to China's Ministry of Commerce, these subsidies amount to import substitution support, which is prohibited under the WTO rules. But for more on this, let me quickly go across to my colleague Rishabh. Rishabh, first give us a background and context of the entire WTO rules, and more importantly, what exactly is the bone of contention over which China and India now are contesting?
Right, this is essentially what India gives to its domestic industries in terms of subsidies via its PLI schemes. Remember, there is a big PLI scheme that is run especially for batteries. The PLI for ACC schemes among beneficiaries are, of course, Reliance, Ola, Rajesh Exports. These companies have come up and been the beneficiaries of various subsidies that have come in by the government. Also for EVs, for a very long time, you've had a lot of electric vehicles essentially getting subsidized by the government. And that is something China has taken an issue with. They've called these very measures that India has taken, they've called them very restrictive. They've called that it is China's industry that is also suffering as a result of these subsidies that the government is giving, which is why the Chinese authorities have now moved the World Trade Organization. They've taken it up in a very in a multilateral fashion at a multilateral platform. So this is also recognizing the strength of the World Trade Organization. That is something that China has done. What the Indian side has said that it has taken a note of this formal complaint, and a review is in progress, and a formal response, a formal counter to all of this will be put out very, very soon.
Thank you so much for that. China challenging India's EV push. It remains to be seen how this actually moves forward, and we'll of course continue giving you the latest developments. Let's move on now with Diwali just around the corner. What's in store for Trent Westside? What are shoppers adding to cart, and is there any shift in consumer preferences post the GST boost? Let's find out, and let's listen into the word coming in from Shelina Parthi, the Chief Operating Officer of Trent Limited Westside brand.
Is there a change in behavior that you've seen so far in the purchasing power of a common man post the GST rate rationalization?
Great question. I think from our trade perspective, what we've seen is a really good September. And as the GST was coming and being announced, a slight slowdown at the end of the month. Interesting, not from the younger generation who are not worried about what's happening in the economy. The younger Gen Z client is shopping like crazy, but maybe the more mature, loyal Westside customer is shopping for cars and high-ticket items. That was where the discount meant a lot more. Because we're an affordable brand, I saw now the pickup come in the last 2 weeks as we build towards the Diwali. So a slight shift in behavior, but nothing that is drastic or big in terms of what you're asking.
Interesting. The other aspect is that we've seen as to how, the customer behaving pattern has been changing. The consumer today wants new by the hour, right?
Correct.
What is the kind of change in trends that you've seen in terms of consumption? Because the Gen Z wants newer things every day.
You're absolutely right. And that's been the huge shift in the last 12 months. Newness every Friday is what we're doing, but it's not just newness for the sake of it. Innovation, new product categories, new colors, new denim shapes, and we're seeing that newness really driving a different outcome. And for me, what I'm delighted by is the younger customer is starting to shop Westside. And that was the bit that was really important in terms of our strategy. I think the other thing is also agility in our supply chain. The fact that we are looking at an idea and we're bringing it to market in a matter of weeks. So trialing, repeating, bringing new things, seeing what's working. I think speed in fashion, speed in product has been a huge shift in our business as well.
So it's the Gen Z that's adopting very fast, is that correct?
Absolutely,
or the millennials?
right.
It's the Gen Z.
I'd say the Gen Z is really where I'm seeing the traction.
Yeah.
Millennials is great, steady. What's good about millennials is they're part of the community. We're very much about community marketing, engagement. So where I've seen the millennials come is through our community activities, our 5K runs, our Westness activities, our Zumba classes. That's where I've seen millennials. They want something beyond the everyday working life, and they're connecting to Westside in a slightly different way. So very different customer behavior depending on the age profile.
Interesting. You did mention that you are very fast in terms of changing your inventory. Just want to get a sense as to how are you actually managing or adopting this change in fast consumer behavior with respect to your inventory. Where does it stand?
Well, I think if we don't do it, we won't win in the market. So it's non-negotiable. The teams have been set up in such a way. We have trends, we're using AI interventions, we're looking at our vendors, and the whole speed to market from fabric to design to trend, we can do very quickly, land it, have success and repeat. And I think if we keep doing it, we have pivoted and set up teams in a different way, and we're seeing it make a difference in our business.
Interesting.
Meanwhile, Siam Chairman Shailesh Chandra believes that GST 2.0 and the festive period have together lifted the consumer sentiment. While speaking to NDTV Profit, he said that the new rates have changed the course, otherwise the industry was seeing a lot of stress. However, he was also cautious that the industry might not be able to service the entire demand. Let's listen in.
GST 2.0 definitely has brought a lot of cheer and uplift of consumer sentiment. I think that is definitely the key reason behind this. There's of course the pent-up which was building up for 1 month, post the announcement of potential GST reduction by the Prime Minister on 15th August. So there were customers who were waiting, so that pent-up has got released. And generally festive period are, 1.3 times, 1.4 times of normal months. So altogether has lifted the sentiment. And I think this has really changed the course of otherwise the stress that we were seeing on the consumer sentiment side. And also in certain segments you have seen the financing options easing out and all, like for example in three-wheelers and some of the other segments. So all in combination has really led to this kind of a spurt in demand.
So since different segments have seen a very strong demand for all the categories that are there out, but do you feel that this demand is going to sustain for the coming few months?
Yeah, because you're right in asking this question, because there's a lot of noise of pent-up and festivity right now. So we'll also have to observe how this sustains. But I clearly see that in the festive period, we might not be able to service the entire demand, because all of a sudden it has gone up so much that our ability to supply also and the logistics to handle that kind of a load will be a question mark, and therefore there will be overflow to the subsequent one. So that overflow will help as the pent-up which is built and which has not got serviced. But on top of that, the GST reduction will bring generally a better sentiment across the board, which will lead to more disposable income in the hands of the customers. It will trigger more economic activity in all the sectors, so it will have across the board, whether we talk about commercial vehicle, passenger vehicle, two-wheelers, across the board improvement in sentiment. What this number will be in quantifiable way, it is very difficult to predict, but in November will be the first month we'll start assessing this.
So basically, we can expect Q3 to be more stronger in terms of numbers versus Q2. And will Q3 also be like one of the best quarters ever for all the segments?
I hope so, but there's no reason not to believe that quarter 3 should remain strong. The way, as I'm speaking, as of today, what I have been seeing for 1.5 months, the demand remains strong. So a lot of lead indicators are positive. So I believe that quarter 3 should be really good. Highest ever, I don't know. I'll have to see the historical numbers, but it should be strong.
And some news coming in from Mumbai now. The newly launched Mumbai One app has seen an overwhelming response, crossing 1.25 lakh downloads within just 72 hours of its launch. The app, unveiled by Prime Minister Modi last week, aims to make travel and city services more seamless for Mumbaikars, integrating metro, bus and other civic utilities into one digital platform. Officials say the strong uptake reflects growing interest in smart mobility solutions across the city. Let me bring my colleague Arushi in, who has filed this ground report to bring us the reality of it.
Getting around Mumbai can feel like a marathon. Now, whether it is booking trains, buses or metro tickets, there is one app that promises to change it all. That is right, there is no more juggling between apps to book different train tickets or bus tickets. Yes, we're talking about the Mumbai One app, which promises to make commute easier for travelers. So let us put this app's breakthrough through a test. We are at BKC metro station and we're going to book a ticket right here on Mumbai One app, and we're going to start our journey to Siddhivinayak. So as you can see on the app's interface, there is an option of quick ticket. I'm going to book that and I'm going to click Metro Line 3. I'm going to select my station and then the destination. I am currently at BKC station and I am going to Siddhivinayak. This is my option here. This displays a total fare of 30 rupees and now I can pay through the same app. Now, as we ride the metro, the Mumbai One app keeps us updated. I'm currently underground, so I'm not getting much of a network here, but in the app, I could see live arrival time, route changes, and easy access to station maps. Now, I'm going to take bus number 118 and I'm going to book its ticket right here on my phone on Mumbai One app. Let us see. I am currently at Dadar station, and as all Mumbai suburban routes are integrated, I am going to generate a QR, which is a paperless ticket, right here on this app of Mumbai One, where I will travel to Bandra local station. The Mumbai One app truly brings public transport under one digital roof. I'm currently at Bandra station, and as you saw, I was able to book a train ticket, a metro ticket, and even a BEST bus ticket just by using one app.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new
Hello and welcome to KYC or Know Your Company. I am Puneet Zaveri, and over the next half an hour or so, we'll put the focus on one key company that you don't want to miss. On the show today, we're speaking about IREDA. We will be joined with the management of the company as well. But before that, let's first look at what the company actually does. It is one of the key infrastructure financier companies in India, largely operates as one of the pure play financing companies essentially at this particular point of time. And we have seen that, and we will right now look at actually why are we focusing on IREDA before we move on to about the company. The first question, what are the sectors and the sub-sectors essentially that the company focuses on will drive the growth for the company in FY26? The second key question that we're posing for IREDA today is that, the cost of borrowing that has slightly inched up in this financing year, and we are seeing that the RBI has, started a rate cut cycle. How will that put the pressure on NIMs? That'll be the other question that we will be asking the management today. The third one, what will the profitability run rate look like at this point of time? And finally, the last couple of questions, if we can load up that very quickly as well, will be on what will be the outlook of the renewable energy space that will determine the company essentially in terms of the disbursement growth as well for IREDA. But first, let's look at about the company and what we will be looking at for IREDA. Specifically, it is one of India's largest pure play green financing NBFCs. They focus on the renewable energy space, and that's almost 100% of its disbursement book. It provides a range of financial products and services for this particular sector. And now we'll talk about the multiple sectors that it has, financing outlook of. They do a lot of funding as well as financing for solar projects, hydropower, ethanol, as well as biogas. So it is within the renewable energy space as well, very well entrenched across products. When you look at the sectoral split, which was for the company for the first half of this fiscal year, you will see that some key sectors like solar thermal was roughly around 26%. That's right down at the bottom in blue. While the sectors like ethanol as well as manufacturing and hydropower are starting to see this, the subsections increase as well. Hydropower is almost 11% for the company. Wind is almost 16%, while the others are currently at about 34%. That is a multitude of sectors which we will talk about right now as well. But that's largely about the company. We'll now look at the other metrics as well which we have, which will be the rating parameters for the company. The first one will be essentially the income statement, which will be, of course, focusing on. Balance sheet will be the other key aspect that we'll be watching out for. Asset quality and what has been the GNPA and NPA ratio is the third key aspect. Operational metrics, which we will focus on, is the fourth one. And finally, return ratios, shareholding, street cred, as well as what is the valuation that it is currently trading at. But first, let's start with the income statement of the company. Now, when you look at the income statement, it has shown a very substantial increase in its interest income over the last 3 years, from roughly about 3,300 crores. It's up all the way up to 6,500 crores. We've also seen the profitability of the company almost double from 865 crores to almost 1,700 crores. The reason why you can see a neutral rating on this one is because we started to see the provisions increase for the company at this point of time, and especially going into the last 6 months, we've seen a substantial increase of that. So hence, we've given this a neutral rating on the income statement. When you move on to the balance sheet, that's the second key parameter that we're looking at. We've seen an increase, substantial increase in its loans as well. When you look at the last 3 years, from roughly around 46,000 crores at the end of FY23, it is substantially increased to almost 75,000 crores, and hence we spoke about the company being one of the largest in the financing space for the renewable sector, and that's renewable in the loans as well. Substantially, what's interesting is that the borrowing number has kept pace with the growth for disbursements, but what's also interesting is the net worth increase of the company. It's almost doubled from almost 5,935 crores all the way up to 10,200 crores. The net worth has also increased into the 6 months of FY26 and now hovers somewhere around the 12,000 crore mark. So it's important that the profits have been added to the net worth in this particular point of time. So this is a clear thumbs up from our side. So that's 2 metrics done. The third one, which we want to talk about, is asset quality. And here is where it gets slightly tricky at this point of time. We've seen the gross NPA numbers as well as the NNPA numbers as well, slightly starting to inch up, going into the FY26 as well. So they have, while stabilized FY23 to FY25, for H2 the number has increased for both these metrics, and hence we've given this a neutral rating for now. We'll speak to the management of what they expect of IREDA as well as the asset quality, because compared to the same time last year as well, we have seen an increase in H2 of this year, which will be something to watch as well. Finally, in terms of operational metrics, we have seen the company at this point of time in terms of yields largely remaining stable at 10%. We've seen just a slight inch up in the yield of assets by roughly about 6 basis points. The borrowings also has largely remained stable at subpar of the 8% mark, while the interest spread has increased to 2.42% at that point in time. NIM has also increased at 3.2%. We're seeing for the banks that we will see starting to see some pressure on NIMs in this quarter, Q2 of FY26. That could be the fate for IREDA as well. So we will have to look at how the H2 happens for IREDA in terms of the NIMs, while the provision coverage ratio, and that's one of the key reasons why I've given this a neutral as well, because at 45.3% at the end of FY25, while it has improved, it is starting to have some effect because of the higher provisions and the higher gross and net NPA that has increased for the company. You are starting to see an impact on provision coverage ratio as well. So they will have to essentially provide more, and we will see that impact on the income statement over the next couple of quarters. So it is beautiful how all of these 3 key items are linked, and hence you can see that for income statement also we maintained a neutral rating, similar for the operational metrics as well. Return ratios for the company has largely been quite a decent performance for the company, roughly around 2.39% in terms of return of assets. That has improved from the last year, and so has the company's return on equity. So this, we've given this a thumbs up. ROE performance for most banks is hovering between 14 to 16% for the mid-tier ones. For banks like ICICI as well as HDFC, you are seeing a higher ROE, but they have kept pace with the larger players. So this is a thumbs up from our side. The ROE performance has been quite complementary with the growth that the company has been seeing as well. Shareholding is the other one. Now, since it's a government-backed company, you do get strong stability from the government at this point of time. What's also interesting is you're seeing a reduction between September and March of this year, and that's largely because the company did a QIP of almost 2,000 crores. That will help the growth funding. And this is a key question we are going to pose to the management. But largely, the promoter holding has slightly come down to 71.5, almost 71.7%. Still a very strong number and strong parentage for the company at this time. So, we've seen a lot of retail investors participate in this particular IPO. And I'll just talk about the pricing in just a bit. But this is a clear thumbs up from our side. It's a strong parentage from the government that helps support the growth of the company as well. In terms of street credentials, that's the other one I want to talk about very quickly. You will see that over the last year or so, the share price performance have actually been quite weak. Down a percent, almost up a percentage point in a one-year performance. But when you look at the other time frames, it has underperformed the Nifty as well as on the benchmark indices. So down 8% on a 6-monthly basis. On a year-to-date basis, it's actually down 30%. It's also important to note that this year we saw the impact on IREDA because of what the Gensol fiasco as well. They had lended money to the company to buy the vehicles, and since when that went bust, you saw huge impact on IREDA at this point in time because they had funded some of the key aspects. While the matter is on the litigation now, there will be some key aspect which has impacted the street care at this point in time. But when you look at the performance, it's currently trading between 155 rupees per share. The IPO price was 31 rupees in November of 2023. So all those investors who got in saw their money rise almost 5 times from that particular metric. When you also look at the other ones where the issue actually opened at 50 rupees per share, so we've definitely seen investors making money, and hence you've seen the returns for them also coming through as well. When you look at the other metric, which is in terms of valuations as well, that's the other one I want to quickly point out as well, because currently trading at 24 times price to earnings, 3 to 3.5 times in terms of price to book is what it trades at. So we have seen, the stock is not cheap by any means. Being the largest financier, a lot of investors have shown confidence, and that has helped the company in its performance at this point of time as well. So, for IREDA, you do need some key growth metrics to talk about, as well as in terms of what could be the performance of the company. But valuations are slightly punchy, at least at this point of time as well. So, largely, when you look at all the metrics, and if we can pull that up on screen as well, in terms of the 8 metric that we've covered as well. That in terms of the income statement, we've given this a neutral rating. Similarly for asset quality as well as operation metrics, because a lot of it is linked for the company at this point of time. Balance sheet, we mentioned about the strong parentage that it has offered, so we've given this thumbs up. Return ratios, shareholdings is also a thumbs up. While the street credit performance, we mentioned the last underperformance of the last 1 year has hampered the stock price, so we've given this a thumbs up, thumbs down, and valuation largely at this point of time has been neutral. So if you can give us the total ratings, that comes at 5 out of 8 for IREDA, and that is our KYC rating for the company. We will be joined by the management very quickly as well, but before we do that, let's slip into a very short break at KYC. Back more with the management to get us some key perspective on the business and the outlook that he's looking at going forward. Stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is
Welcome back to KYC, and we put the focus on IREDA today. We just told you about the key metrics, but let's go across to our management now for the day. Mr. Pradeep Kumar Das, he is the chief, the CMD of the company at IREDA. Mr. Das, firstly, a very good morning to you, and thanks so much for joining in. It's Puneet this side. We spoke about, the company's growth metrics. Let me first start off with what you are currently seeing in terms of, the power demand on the ground. Do you anticipate that over FY26, the last couple of quarters, and going into FY27, power demand will be substantially stronger to help your disbursement growth as well?
Yeah, very good morning and thank you. See, power demand going to continuously grow because remember that we are determined to become developed economy by 2047. So for development, you require energy. And for energy, 90% energy to come from renewable energy if you are to reach to the net zero. So that culture of developing renewable and looking into alternate to fossil fuel, that is there. And as a result, 247 gigawatt of capacity installation has already happened in the country, out of which around 127 solar, 53 wind, 55 hydro, and 12 others. And if you see last year, around 29.6 around gigawatt capacity addition had happened in IRE. Previously, in last 6 months, 27 gigawatt has already been added. So as long as the capacity installation will grow, our lending will grow. And if you see last 22 quarters, 5.5 years, we have been growing and our loan book is growing in a CAGR of 27-28%. And if you see the half yearly, it is 31%. So that means continuously our CAGR also growing. And which the business of loan book or disbursement we used to do in 1920, 2021 in a year, we are doing in a quarter nowadays. So against an annual sanction of 30,000 around, if you remember 5 years back when I joined, 20,000 and 22,000 like that. And now we have already achieved in half year 30,000 crores of sanction and 15,000 crores of disbursement. So this focus on renewable of Government of India, post the new government coming in power since 2014, it is there. And we don't have any doubt till at least 2030, the target what Government of India has set for 500 gigawatt of non-fossil, out of which 485 gigawatt of renewable, that is for sure going to be there. And the government has created a perfect ecosystem in which frequent stakeholders consultation by the ministry, as well as periodical interaction with the regulator and lender, that is happening. So since the sector is very fast changing and technology centric, faster decisions are taken many a times. And that as a responsible lender since 38 years and being sole arm for almost 27-28 years of MNRE,
right, we have been playing that role, and to speed up the RE, particularly solar, SECI was brought into play. And the SECI, in addition to that, now they started doing other RE also. Right. Mr. Das, so that point is quite clear. The power demand is strong. You have a strategic focus from the center since 2014. You're seeing that till 2030 as well, and that will eventually impact the disbursements in a positive manner. Got that point. How does that look at in terms of your asset quality? Because while a 31% loan growth has helped in terms of a loan book now almost at 84,000 crores at the end of quarter 2, you have seen the GNPA actually increase as well in this point of time. For, till September, it's roughly at 3.97%. And while that has come down from what we saw at the level of March, it has actually inched up from the September time last year. So what is leading to that pressure in terms of asset quality for you?
The last quarter was an exception quarter in last 22 quarters, if you see. March 20, we had net NPA 7.18 and gross NPA 10 plus. And we brought it down to below 9.9. Okay, 24 and 25 it was 1.35. And June quarter only, two groups accounts that became bad, around 1,500 crore roughly. That one group, it is widely known in the market, that is General Engineering. Not only we, around 17, 18 lenders were there. And post our result, this was the concern by the investor as well as most of the anchors in the channel. And during that period, we had assured that we will take fastest corrective actions. See, we as a lender, whatever best action from our side we can take. And wherever the borrower side irresponsibility, which is completely beyond the control, or largely beyond the control, those things we have to manage. And probably here, if you see the interim report of SEBI, it was completely misgovernance by the promoter.
Yeah.
And just further input I'll add in these two accounts that will substantiate your query. In case of Gensel, the first company went to NCLT and got the NCLT application admitted in just 29 days.
Right.
And COC meeting has happened and the RP has taken majority of the assets.
Yeah.
And we are confident that vehicle will start running on the road very soon. And the other group which was happened, it was largely because of the Andhra government's PPA issue.
Yeah.
And that also we have sorted out a couple of accounts and we'll be in the process of settling more. And hopefully by December or March, those will be over also.
So, Mr. Das,
essentially... asking NPA, let me begin.
Yeah.
If you are asking NPA, in last 38 years, we have given 1.71 lakh crore. Our cumulative write-off is 135.
Yeah.
So NPA can happen, but write-off doesn't happen.
Yeah.
So the investor is concerned about write-off.
And that's something that you've been transparent about as well, because when you spoke to us post Q1, you did highlight this particular issue at that point of time as well. So got that point. How much is the total provision that you made for both of these accounts? And I'm sure that, once there is a resolution, whenever that happens, you will update us on that as well. But how much is the total provision? And you don't expect any more provisions from these two accounts specifically going into Q3. Is that correct?
See, as far as accounting provision is concerned, in the two account, you said that Andhra PPA based account, provision we have made long back, 1920. If you see in last quarter, when the NPA, it became NPA, but no further provisioning was made in that because we had sufficient provisioning. Because we are fully compliant of RBI guidelines as well as India's company. Expected credit class methodology provisioning, what is mandated to us, we are sincerely following that.
And how much is that, Mr. Das, just for the benefit for viewers, for both those, how much is that provision?
Exact figure, I think 350 and odd. So that, again, I can tell you whatever figure, whether 350, 400, I don't remember exact figure, but those are mostly available in our published result because we are publishing quarterly basis full audited result. Even this yearly, we have submitted full results. The detail about these two accounts also we have published. That is available in public domain. Our concern, as you said, once this car starts running, and as I said, the other group already one account they have fully paid, and the remaining two accounts settlement company has agreed, and that is under process. Another 3-4 accounts resolution plan what they have it is in pipeline. That is going to, I think, we'll be taking proactive action. The work we have taken in the case of Gensel in the other NPA assets also. You are asking provisioning, almost 60% provisioning has been done in those cases.
You also recently raised QIP in this particular year as well, over 2,000 crores. What is the deployment of that particular sum of amount that you raised?
See, any money we raise, I think within a couple of weeks it is getting depleted because we have that kind of fear. If you see our CRAD, which we prefer, I'll be happy if we can maintain at 20. But if you see, we are almost getting into 17, 18 because our net worth base is not that big and the sector is expecting much bigger disbursement from our side. So therefore, we keep on adding net worth through first GOI equity infusion by in 22 by 1,500 crore, then IPO, then QIP, then 5 years of continuous dividend exemption also we have taken. Because when we are having 31% of almost CAGR growth in loan book, and if you look at the NIM is also continuously improving. If I give you the 3 quarters figure, 3.27, then 3.6, and then 3.72, the last quarter, it is going up. And if you see the borrowing cost, it was 7.8 and then 7.61 and 7.4 now. So it is borrowing cost is going down. When this kind of performance is there, any investor, whether Government of India who is having 71% holding, certainly if they are allowing us for dividend exemption, we are plowing back a profit. That is enabling us to maintain a healthy CRAR, and that is enabling us to disburse higher amount. Suppose hypothetical, I am saying, if we pay the dividend of 500 crore,
right,
then another 500 crores of disbursement we cannot do.
Yeah.
So therefore, all out measures have been taken to strengthen the equity and asset quality. So far, we have been very fortunate in last 22 quarter, except that last quarter what happened, and that is again, that has enabled us to clean up many of our old accounts also.
Right. My last question, Mr. Das, to you, because we are seeing you lend across a lot of sub-segments in the renewable energy space, and your solar thermal is almost 1/4 of the book. Wind is almost 12% and hydro is almost 10%, apart from the state utilities that you lend to them as well. Which segment do you expect in terms of growth for the next couple of quarters that investors should watch out for, which could have higher growth, in the meantime? Because we have seen substantial investments go by a lot of players in modules, in building cell capacities as well. Could you give us some, perspective apart from these as well? Because I could see in your presentation there are multiple, but just want to get some perspective on these 3 segments.
Yeah, if you see our loan book, the composition like 50% is vanilla IRE, that is traditional wind, solar, hydro, and 22% is emerging IRE, and 22% is in the state utilities space, and 4% is others. If you see the 247 gigawatt of India's capacity, there will find 127 is solar, 53 is wind, and 55 is hydro, and 12 are others. See, solar is growing very fast and faster. And if you see in solar space, there are many lenders available today. But in the emerging one, not much lenders are there. If you look at ethanol, we have lended almost 24% of India's capacity of ethanol in the country. Now, you are talking of module and cell. As of now, I think around 100 gigawatt of module manufacturing by 25 August 2025 is there. And cell around 25 gigawatt by March 25, and wafer 2 gigawatt.
Right.
So our focus is, government's focus is to have Atmanirbhar Bharat, so that we should not depend on place for our module. At least cell manufacturing is growing. So, and then way forward, we'll be looking into complete integration. That is wafer, polysilicon to wafer, and wafer to ingot, and then cell and module.
Right.
And we, being the responsible agency and sole arm of MNRE, we have to lend the entire gamut of IRE. Even our basic job is also in the emerging IRE, we have to handhold and disrupt until it gets matured, which we have done for wind, solar, hydro in the past, small hydro particularly.
Right, sure. Got that, Mr. Das, and thank you for joining in, giving us perspective across a bunch of topics for IREDA as well as for the industry. But with that, viewers, that's all the time that we have on this edition of KYC. Thanks so much for watching. A lot more action on the other side. Stay tuned.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely. You can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together. to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. I'm dressed like this today because we're starting our festive celebrations here on NDTV Profit, and so that, on that note, let me wish you and your families a very, very happy Dhanteras in advance, happy Diwali in advance, and season's greetings. And at this time of the year, the tendency is to talk about a few things, among them precious metals, but I thought, why not have a holistic conversation about portfolio strategy from Diwali to Diwali? And for that, I've called Vijay Mantri, who is a well-known investment expert, to our studios. Vijay, thanks so much for taking the time, and season's greetings to you and your team and your family as well.
Thank you very much, and thank you very much to you, your team, and your viewers. Happy Diwali, happy Dhanteras, and happy New Year's.
Absolutely. So let's talk about this, because I think a lot of people have gotten used to the idea of going out and buying gold and silver during Dhanteras and Diwali. But from a strategic standpoint, if you leave emotions out of it entirely, and if you had, say, 10% of your portfolio in gold and silver, over the last year that could have gone to 15 or 17 or 20%, simply because of the way that gold prices have gone up and silver prices have gone up. Your strategy would say, take money off the table. That is to sell gold and silver. But then how can you do that on Dhanteras?
So it is, whenever you look at gold, it is very important to learn the most important lesson the gold teaches us, the gold investing teaches us. And the gold investing teaches us that why Indian women are the smartest investor. Why? Just think about that, why they are the smartest investor. Because they have been investing all point of time. They never looked at market condition, they never looked at geography, geopolitics. They never looked at P multiple, what is happening to corporate earning, what is happening to employment. They didn't look at the macro data. They kept investing with the intent not to sell ever. And that is the reason that they made lots of money. So gold investing teaches us very, very important lesson, that you made money in asset category not because you had a view. You made money because you stayed for the long term. So if your view in a gold is 10-year plus, there's no doubt that you can continue to keep investing. However, please keep in mind that how does the gold prices move? We know how does various asset prices move. If you look at debt, it has a coupon, and you can figure out that what is the inflation rate, and if the rate of coupon is lower than inflation rate, it means it's not a great time to invest in debt instrument. Perhaps the interest rate will go up, and when you see interest rate much higher than the inflation number, then you can figure out that it's a great time to lock in for the long term.
Because interest rates could
interest
go
rate
down.
Would ultimately come down, or it is a great time. So when you see the real interest rate in your favor, you can go for long-term debt product. When you look at equity, there's earning, and from that you can figure out what is a P multiple, reasonable valuation or not. But what is the most important thing which drive the equity market is that corporate earning. And corporate earnings are driven by, at least in India, driven by what is happening on GDP. But there are some phase in the market where GDP expansion happen, but it does not translate into earning growth.
There's a lag.
There's always a lag, and there's always lag, and the market always go either behind or ahead of what we are seeing right now. Gold is a one asset category which is completely driven by demand and supply by and large. And what in recent past we have seen, one is that gold has not done well except last 2-3 years. The 10-year CAGR was less than 10%.
And then the catch-up is happening.
And the most important reason is that not only dollar debasing and there's a lot of doubt about dollar and central banks across the globe are buying, but most fundamental thing is that a lot of money available in people's hand. People made money in last 10 years in equities, truckloads of money. Now when they're figuring out that if you look at the US market, which is 2/3 of the global market, and that market is completely driven by Mega 7, and Mega 7 is completely driven by what is happening in AI. Now people are taking a counter view. Suppose things doesn't work out that way, then what should we be doing? And same thing central banks are doing. So it is a completely demand driven, gold is complete demand supply driven, and silver prices are packed to gold prices.
Yes.
If you look at 21st century's history, the gold prices has been 65 to 75 times higher than the silver prices. Right now it is 85 times. It means the silver perhaps have more leg left if the gold prices remain this way. Second point to keep in mind is that let's look at 10-year historical return of gold. Except the period of 1970 to 80, where the gold appreciated from $35 to $850, 24-time growth in a 10-year period. And that happened because from 1935 to 1970, gold price was capped at $35.
Yeah, because it was the gold standard.
Gold is standard, so it has to catch up.
Yeah.
After that, we haven't seen 20% CAGR except in November 2011, where 10-year CAGR has been 21%. And in November 2011, 10-year gold return has been 7 times.
Right.
Right now, 10-year gold return has been close to 5 times. It means that the gold price can go from these levels by 10-20%. Yes, it can go. So if you have a gold in your portfolio, stay put, don't do anything.
Don't sell.
Don't sell at all. And if you want to give fresh allocation, keep in mind your holding period has to be minimum 10 years from these levels. This is about gold, okay? Silver, however, is much more volatile asset category.
Yeah, it has hit that $50 mark and then crashed after that.
$50 mark after 1979. So is incredible number.
Yeah.
But silver can have a long period where it didn't deliver any return for 20, 30 years. So be mindful of that. So, you know, but it is very difficult to stop the people when they see the tsunami of return. It is impossible to tell not.
So then from that perspective, if there are deviations in your asset allocation strategy on account of the outperformance of one asset class, which we've seen, 70 plus returns for gold, silver over a certain time frame, right? Whatever, you look at point to point, and we're talking about Diwali se Diwali tak 40+% for gold and silver, right? So therefore, the question that I'm asking is, if there is a significant deviation, how do you correct it? If you don't have incremental money to invest, if you have, of course, you can deploy another asset.
It's come down to basically to how do you look at investing. Investing is future looking, and futures are always uncertain. So you have to do a pre-analysis rather than post-analysis.
Right.
Right now, what we're doing post-analysis, gold has done so well, silver has done well, and equity has not done well. Whenever you create a portfolio, whenever you look at the portfolio, you need to figure out, this is the way my money has been invested. What if the equity doesn't do well? What if debt doesn't do well? What if gold doesn't do well? When we sit with our client, we do this analysis first.
Okay.
The not post-analysis, pre-analysis,
right.
that here I'm investing, suppose I'm giving 50% to my client in debt and 50% in equity. We tell the client, if the equity market perform, your debt portfolio will not look good. We have seen with many investors from 2000 to 2024, where the debt didn't do well, client bola, yahan kahan paisa atka diya hamara. And similarly, when equity doesn't do well, debt will do well. So I think it is very important to do that in the mind of investor, with the investor. So investor need to look at their asset allocation, how they have been diversified. Look at total gold allocation, just not financial allocation.
Right.
How
so
much
includes jewelry and all of that.
Include jewelry and everything, and see how much is that in the total portfolio. It can be anything between 5% to 20% for normal, typical Indian family. For the lower class and middle class, the number could be much higher. But for middle class and wealthy families, the number could be anything between 5% to 20%. I think that is, in my opinion, is more than enough.
So therefore, if it is crossed certain boundaries, which could well have happened if you already had a 15 to 17% allocation, which is quite normal, as you pointed out, for a lot of families, and it's gone now to 25, 30%. What do you do then?
Do nothing.
Do nothing.
It's very fascinating because the best return in any asset category accrues when it is going through bubble zone.
Okay.
So perhaps it may enter the bubble zone. The best return comes in the last leg of any bull market in any asset category. So we'll see that, and as long as you're holding for 10 years, even from these levels, you'll end up making, at least in my opinion, higher single digit return, if not less.
Okay.
From these levels. So in my opinion,
do nothing.
Do nothing, because you also incur taxes.
Absolutely. So point well made. Therefore, let me ask you this, on the equity side, a lot of investors over the last 12 months will have been a little disappointed, right? I hear a lot of people coming through and saying, do I continue my SIP because I've gotten absolutely nothing? Low single digit in certain cases where people have gotten a little unlucky with their selection of mutual fund scheme. Maybe they got swayed by the past returns and they went after a scheme that was an outperformer and they have gotten negative returns. So what advice do you give to clients perhaps who come to you with this, or people who are saying this?
So I think most of us have been talking about last more than 1 year plus that what return you've seen, you will not see those return going forward. So that is going to play out. So market have three distinct phases. One is that accumulation phase, then there's a growth phase, and there's a bull market. Right now we are going through accumulation phase because what is happening is that Nifty's EPS is not growing. It is going at very low level. But please keep in mind, if you have witnessed a journey of 2020 to 2025, 24, the journey has happened to most people if they accumulated mutual fund unit from 2015 to 2020. That was the best time to accumulate unit. That's why you could see great numbers on your portfolio. So in my opinion, this is accumulation phase. GDP is expanding, but is not translating into corporate profit as per the expectation of the people, and that's why we're seeing the market moving sideways.
Yeah.
This is a phase we have seen 3, 4 years where GDP expanded, and I'll give some very interesting idea, a number. In 2010, India's total GDP was 78 lakh crore. In 2020, that number became 227 lakh crore, so 3 times GDP growth. But total profit of listed companies in 2010 was 3,99,000 crore, which became only 4,55,000 crore. GDP expanded 3 times, but the market profit had just gone up by few percentage point. What it did after that, from 4,55,000, GDP expanded from 220 to close to 3 and 3.60. But the corporate profitability went up from 455 to 16 lakh crore.
Right.
And that is the reason we see the gain in the portfolio for many investors. So right now, in my opinion, GDP will keep expanding. It is a great accumulation phase. Suppose you are a long-term investor, you will not find this kind of opportunity too many times. Accumulate. A asset category's best return accrues to a person who has the ability to hold it when it is in a drawdown phase or accumulation phase. Everybody expects the bull phase in asset category, but the best return accrues to people who could live through. Suppose somebody who's invested in gold in 3 months, 6 months back, he would have seen 30%, 40% gain in the portfolio. But what about the person who is accumulating from 2012, 2013, 14, 15, when the gold price was 30,000 rupees?
So fantastically put in. Therefore, the last question, right, and that has to do with strategy going forward. Would you say that multi-asset funds, and the reason I bring this up is because it has a flavor of gold without you having to, or silver for that matter. There are a few schemes that have gone out and said, I will buy 20% and have done that, 20% in silver, before the silver run-up took place. So it's a very fantastic call that was made. Some have 9%, 10% silver, reduce the holding on gold. It doesn't always work, but it's good from your perspective because the tax implication is not there. If you are not a perma bull on something like gold and silver, and if you're not attached emotionally, do you think that this is sufficient?
Yeah, I think multi-asset fund is a great idea. But when it comes to investing, never ever assume that is without emotion.
I agree with you. I absolutely agree with you.
And the performance of gold tells you, emotionally attached, culturally, part of our psyche, and that's why gold we never sell. And we don't even compare what is happening to geopolitics or anything. So I think the most important lesson to learn from gold is, very honestly, you made money not because of you. You made money because of a holding period.
You held it.
You held it.
I mean, you don't even have to go too far. You can look at statements like, you never sell the family silver. Of course, that is more relevant today than anything else.
Yes.
But I think it's been a fantastic chat. Vijay, as always, thank you so much for taking the time.
Thank you.
All right, so insight that you can use: don't do anything. Gold prices are going and hitting all-time highs, so are silver prices. Don't do anything is the advice that comes from Vijay Mantri. All right, let's talk about the one asset class that we've not spoken about so far today, and that is fixed income. And we've got Devang Shah, who's the head of fixed income at Axis Mutual Fund, joining us right now to talk about it. Devang, thanks so much for taking the time. All right, the one category that we've not spoken about yet on today's program is fixed income, and let's amend that. Let's correct that. Joining me now is Devang Shah, who is the head of fixed income at Axis Mutual Fund. Devang, thanks so much for taking the time. Pleasure speaking with you on Your Money Matters. I've spoken to you so many times over the course of the last several years about fixed income. It's something that is very close to my heart, but investors have perhaps a little bit turned away from the category because of the change in the tax laws. Interestingly, though, I hear a lot of buzz about one specific category, and among others, but this is the income plus arbitrage fund of fund category. And a lot of people have heard about it, but a lot of people haven't. Why do you think that this is getting so much traction?
Yeah. So thanks, Alex, for having us. And as you rightly highlighted, I think fixed income is a good topic which it's close to both of us. See, over the years, as you rightly highlighted, and if you look at 2010 or before, the overall debt pie in the overall fixed AUMs of mutual funds was significantly higher. And post the tax efficiency and over the years, I think its share has been continuously falling. But it is not completely right that flows have stopped in the debt mutual funds. In fact, if you look at the last 12-18 months, thanks to the macro cycle and all the, you spoke about one category, which is income plus arbitrage. I think the macro reasons, as well as the introduction of this new category, we've actually got a lot of flows. If you look across on a base in the last 2 years, from a base of 14 lakh crores on fixed income AUM, today it's moved closer to around 19 to 20 lakh odd crores. So it's a good growth over the last 2.5 years. Yes, a part of it is coming into the traditional money market solutions, large part of it. A lot of movement and growth of AUM has happened in corporate bond funds. But coming specifically to the new category, I think the new category is gaining a lot of traction from in the last 12 months. So we got clarification about this category to the tax bill in July 24, and post that with consultation with SEBI, the regulator opened up this category. It is income plus arbitrage. If I simplify this category, what does it mean? It's an open-ended fund of fund, whereby 65% of the assets, up to 65% of the assets are held in debt, and 35 to 40% of the assets are held in arbitrage funds. The combination of the two, SEBI has classified this category where you own less than 65% debt and 35 to 40% non-debt. It is called a specified mutual fund category. And if you hold your investments for more than 2 years, you're actually taxed at the rate of 12.5%. So in a simple terms, this actually takes you back to the pre-2023 tax efficiency, which was there on debt mutual funds, by just tweaking our allocation partially by allocating to arbitrage funds. So this category has got a lot of traction over the last 12 months, and we have seen more than 20-25,000 crores of AUM coming in this category. There's participation all across, from institutions to ultra HNIs to retail individuals. So I think this fund of fund category is buzzing around and making a lot of sense for investors who are looking at stable, tax efficient solution, less volatile, debt-like returns over a medium term.
Got it. Okay, the reason I like to talk to you often is to get a sense of where we are in the debt cycle, right? And basically the interest rate cycle, because that provides you with opportunities on the fixed income side. A lot of people look at fixed income investments and think fixed deposits, but you can actually make significant capital gains if you time your investments appropriately. And it's not like timing the market in the equity market. Directionally, you can understand where things are headed. So where are things headed? We are at, 5.5% on the repo rate side. Are we expecting a 5% repo rate in the next, say, 2 to 4 months? Considering that inflation is so benign, inflation is so low, there is ample room to bolster growth. Do you think that that's likely to happen? And also comment, Devang, on the fact that on the 10-year yield, and I'm talking about the India bond yield, you've actually had a move higher because of the foreign flows probably over the course of the last few months. Do you see an opportunity there at the longer end of the spectrum to say that you can make an investment in these long bond funds to get capital gains in the future?
So, Alex, you are right completely. I think fixed income funds are the only way out whereby investors, if they want to ride the interest rate cycle and probably take some tactical opportunities, get some capital gains on account of interest rate cuts, I think fixed income vehicles are a very, very good solution for such investors. Now, coming to the specific question on where are we headed on macros, I think June policy onwards, the market got actually very worried. There were 2 or 3 reasons specifically. I think one, the stance change from RBI came a bit abrupt because generally a central bank cuts rates and stance change doesn't happen together. So 50 basis rate cut was very, very well accepted, but with the stance change, I think it spooked the market. The markets thought that probably this is the end of the cycle, and hence we saw some uptick in bond yields. But the major concern started coming in mid of August with the announcement of the GST cut, where people started feeling that if the policymakers have started using fiscal tools, the room for monetary policy easing will be very, very limited. And there can be case for additional borrowing, which led to the rise in yields. So as you rightly highlighted, from the period of June till August end, we actually saw, despite the rate cut of 50 odd basis, we saw yields hardening, yields moving up by around 25 to 30 odd basis. But I think coming into this policy, again, central banker has made it very, very clear. Thanks to the GST cut, the inflation outlook continues to remain benign. So whatever worries they had on account of tariffs, some volatility in oil price, and the base effects working against next year, I think the GST cut leads to a fall in inflation, the projections going closer to 4.5. The second big positive which came across from this communication in the October policy as per us is the growth revisions which they are having. The growth revisions have, obviously it's been tilted up for the near term because the Q1 growth number was very strong. But the H2 growth numbers as well as the growth projections for the next year can be lower because of the tariff rate, which has been now continuing at the rate of 50%. So in the context where inflation continues to remain benign, growth outlook remains patchy, I think this opens up space for RBI to cut rates. We believe so that the policy rate cut in December is a very, very high probability, and they can do a 25 basis cut to smoothen up the markets and support the economies, more specifically the growth cycle. Will the 25 translate into 50 odd basis of rate cuts over 2 policies? I think depends on how long the tariff rate continues in India at 50%. If it continues for long, I think there is possibility that the growth numbers can be weaker, and it opens up the rate cut possibility taking it to 50 basis and moving the repo rate closer to 5%. The other 2 big positives which can come, Alex, as per me, in the next calendar year can be, you spoke about FPI outflows. I think there's a possibility that Bloomberg can look at adding us in the global aggregator index, which can get us some 20-25 billion of flows into India, which will lead to some tactical rally in long bonds. So I would say, yes, we can hold on in anticipation of rate cuts and this possibility inclusion of our bonds into Bloomberg indices. We believe there is scope for 10, 15 to 20 basis of rally or yields getting lower in the next 3 to 4 months.
Got it. So the last point, Devang, is that while we speak about the potential for fixed income, and I think there certainly is a place for it in your portfolio, a lot of people are choosing to take that exposure through your hybrid funds. whether it's your balanced advantage fund or your multi-asset fund, etc., right? So would you say that those strategies are also playing out in those hybrid schemes currently for your mutual fund?
100%. So I think today, if I look across at all my hybrid funds, whatever is the macro view on the outlook, which is more like you are expecting rate cuts, you are expecting some bit of rally in long bonds. Accordingly, we have moved our duration across in our hybrid funds. So if you look across, last year we were very bullish on rates. All our hybrid funds were running a duration which is closer to a dynamic bond fund, which is 7 to 8 years. Now, where we see that we are at the fag end of the rate cycle and there's some tactical rallies or opportunities available, the duration has reduced, but is moved towards a 3 to 5 year segment. Once the cycle is over, and we believe so, the next cycle will be a accrual based cycle where you just get a good carry, the duration will be significantly lowered further and move to the 2 to 3 year segment. So definitely, as per our macro view, even the hybrid in the hybrid funds, the debt portion keeps on maneuvering the duration and the choice of asset class.
Fantastic. Okay. So Devang, thanks so much for joining in as always, and pleasure speaking with you. I certainly enjoy these conversations about fixed income, and I'm hoping that my viewers increasingly do as well. Thanks so much for taking the time.
Thank you, Alex.
All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. Lots more coming up on NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. At a time of global uncertainty, when leaders balance risk with resolve, the most definitive leadership conversation unfolds in New Delhi this October. Catch Prime Minister Narendra Modi defining India's moment in history. Harini Amarasuriya, Sri Lanka's Prime Minister, steering the nation from crisis to recovery. Rishi Sunak, the man who reshaped Britain's political narrative. Tony Abbott, bringing clarity to the geopolitics of the Indo-Pacific. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network, bringing the world to India and India to the world.
It's that time of the year when our inboxes are actually filled with season's greetings, our diets are actually filled with laddus and mithais. Stock markets, well, it's the festive optimism that we're talking about. Who better than someone who can decode this Diwali dhamaka for us? A man who's actually been ringing the bell for decades with good multi-baggers. We have Sunil Singhania joining in. Welcome to the show. Should I call you Sunil the multi-bagger? Because that's what I have known you since the time we started working in this industry. But Happy New Year and season's greetings to you and everyone at home as well. How would you actually look to decode this market right now? Because this Samvat has come in such a time where everyone is trying everything when it comes to domestic markets. You're looking at how do you spur demand from here on? The question is growth, the question is demand, lots that people are thinking about. How would you describe Samvat 2082?
First of all, happy Diwali to you and all the viewers, and thanks for the lovely compliments. When you say decades and decades, I start to feel very old.
Not at
all. So I think equity markets always have phases. And obviously, most of the phases for Indian equity markets have been great. But there are some phases where markets don't make you money or even give negative returns. And I think last 1 year has been that phase where I would say that given all the uncertainties, we have come out pretty well where, okay, we have not made great money, but we have not lost money. In fact, someone to Savat, equity returns in the equity markets are almost equal to the fixed income returns, But obviously, as human beings, we tend to be a little greedy. We've started comparing us with gold and silver and China and so on and so forth because of the last 1 year of recency bias. As far as the Indian economy is concerned, I think we went through some tough times last year. And predominantly, when elections happen, things do slow down. Politicians are busy, the government is busy. You have the code of conduct which comes into play, so new projects don't get launched or announced. Budget got deferred to July, and therefore the ministries got allocations only in August. And as a result of it, September 24 particularly was a very soft quarter with GDP growth of 5% and profit growth of only 3%. I think after that, every quarter we have inched up. We still are a little bit away as far as the corporate profit growth is concerned, but GDP is trended up well. In fact, June numbers were crazily high at 7.8. But we can say with a lot of confidence that we have reached the 6.5-7% of GDP growth. And we are very confident of profit picking up pace, and I'll come to that. I think globally also things have been very volatile, multiple wars and this tariff thing. And I think we are slowly getting over that.
So tell me one thing, what's happening in the markets right now is you're looking at expectations versus what is reality. Expectations were very high that the markets built taking the returns that people got during COVID post-COVID, and that's what people are benchmarking returns to. How would you advise retail investors to actually navigate this kind of a situation? Because it's always the retail investors that get stuck, and we'll talk about IPOs also on this aspect, but it's the retailers who are the last leg.
In fact, I would say that retail India has matured significantly, and that's why you are seeing consistent maintenance of the SIP flows. So I think retail investors are now understanding that equity returns are not about 6 months or 1 year. Equity returns are a basket of 5, 10, 15 years. And as you rightly said, when markets do very well, which happened between 20 and 24, we start to believe that this is going to continue forever. And that has sort of been a little bit of a dampener in that respect. But when we meet our investors and when we talk to friends in the markets, I think investors are now pretty okay that if you are able to make 12, 14, 15% returns compounded in the equity markets year after year, they are pretty satisfied. I think obviously recency bias has crept in other asset classes. So now people have started talking about investing overseas, investing in gold, silver, because of what has happened over the last 6-8 months. And I think that is a circle. But I would say that retail investors have matured a lot. And our advice would be that don't lose confidence just because 6 months or 1 year returns have not been great. In fact, we are moving to a phase where definitely returns will start to show up.
Okay. So there are two sides to the story right now. You're talking about someone who's already invested, who's probably not lost money, but is pretty much at break even right now, and someone who's probably looking to make fresh entries. Fresh entries, obviously, you're talking about something which is going to be upwards from here on. Someone who's really been invested in the markets, is really being patient right now. Would you say the pockets of opportunities then should differ? So let's talk about both of them. One, if you're looking at someone who's entering the markets now, what are the opportunities that you're seeing which they should start exploring now?
No, if someone is not invested in equity market so far, I think this is the best time to invest, and every time is the best time to invest because this is the only asset class which will give you double-digit returns on a consistent basis. I don't see any other asset class giving that. So I don't think they should wait to say that now I'll invest or I'll wait and so on and so forth. Even those who invested pre-COVID saw a markdown of 25%, but from even the pre-COVID levels, markets are up 3x. The funds, markets are more than like 2.5 times. So I think for investors who have not invested, I think you should do it today. There's
but then the debate comes in, Sunil, that should it be gold, silver or markets? And that's what you started off with.
I'm very clear. Last year I was a little bit more optimistic on gold. I'm very clear that 1 year return for gold and silver will be negative. That is my view.
So are you actually relating this to history, what has happened earlier? I think there was a time when silver touched
I don't
70,
track gold and
half.
I don't track gold and silver because there's no fundamental way of telling that gold should be at X price or Y price.
Okay.
You tell me one fundamental research or forward me one fundamental research on gold. It's all technicals.
Okay, so tell me one thing. Someone who has bought gold, has made the returns by now, would you say sell that and invest that money in equity?
If you are significantly overweight gold, you should definitely do it. But if you have just bought gold because every year we buy some gold, I don't think you're going to sell the gold at your house.
Yeah, because right now all housewives are talking to their husbands saying, I think we've made more returns than the investments that you've made in equity.
They are always right and they're always smarter. We don't have any debate about
that. Okay. So, we're but there are a lot of global companies as well, Sunil, right now when you talk about them where the company's market cap itself is probably equivalent to our entire stock market's market cap. And that's where the question comes in, are there more opportunities in the domestic market or people should start diversifying to overseas opportunities as well? How would you look at that angle?
See, one is, the few companies you mentioned where their market cap are equivalent to our market cap, say Nvidia or even Apple or Microsoft. These are not US companies, these are global companies. More of their revenues come from outside of the US and they cater to the entire world. So I don't think it's a right way of saying that, one company's market cap is equal to India's market cap. But at the same time, looking at the size of India and looking at the pathway ahead in terms of growth, very clearly India has huge potential and huge opportunity.
So where are you seeing the potential now?
No, we are equity guys. So
no, within equity, which are the baskets? Because currently, post GST, the thought process was it's going to be consumption driven. Now everyone is watching out for what do the GST collections look like. Has the pass-through happened? And if the pass-through has happened, it's more going to be of a volume game for consumption as well. I mean, you're not going to see that kind of reflection come in terms of profitability, in terms of margins, right? So again, the question is what happens to earnings of the consumption-driven companies. Secondly, the debate is now consumption versus capex. If the collections are not to that extent, will the government spend when it comes to capex?
So if an investor keeps on micro-analyzing stuff, they will not make any returns. I think from an investor's perspective, first be convinced that you have to invest in Indian equities. I think that is a bigger question. Coming to all you have mentioned, I think every sector will have their pluses and minuses, but ultimately you'll have to take a view from a 3, 4, 5 years perspective. Just because GST is cut and near-term growth is there, not there, I don't think you're going to jump in and buy and sell anything and everything. It's more for traders. 2% bana ke nikal jao, that is not what we do. Okay, so everything you do is based on the perspective whether this company can double the profits in 5 years or 4 years. That is what we look at. Coming to sectors, obviously financials, we continue to be positive, but within the financial basket,
there are multiples that have got clubbed into financials.
Yeah, so it's changed. That is what I was coming to. Financials is not only banks. Financials is now, capital market companies, asset management companies, wealth management companies, insurance companies, and so on and so forth. So one has to be, even within financials, be clear of what you want to invest in. Pharma is a good sector. Again, pharma is domestic pharma, global pharma, CDMO, API. Everyone will have their own dynamics, but we are positive. Metals, selectively, we are positive. I think capital goods, we are selectively positive. India has long, again, roadway in terms of Make in India and even export opportunities. And some of the new age companies, I think eventually we'll have to take a look at them, because that is where our spending is happening.
Correct.
So I think India offers huge opportunity because it's such a diversified country. It's an entrepreneur-driven country, and I don't think we should get fixated with near term mein 2% badha, 2% ghata. What you are saying, GST badha and ghata. I don't think we should get fixated.
So what you're saying is the growth story when it comes to India is intact, right? The government is pro-growth. The RBI now as well, with the way they've been acting with the rate cuts, they are also pro-growth, right? So, and now we're talking of Swadeshi, and that's what everyone is promoting. Do you think companies that are driven towards Swadeshi could be your growth drivers from here on? Because then, every sector will have some losers, will have some gainers. So I think that stock picking becomes absolutely crucial.
See, this word Swadeshi sounds good and we should do it, but it's very different from the Swadeshi movement of independence.
Correct.
This time it is very different. I think we should focus on Make in India where we can make in India, and we should encourage companies to see what is right now not made in India, whether over a period of time we can make in India. So there are some sectors which were low-hanging fruits, like electronics. We've started making in India. On textile front, on chemical front, the base raw materials, we are not making in India. We have started doing that. And I think it's a matter of time before some semiconductor facilities comes in. We are already seeing 3, 4 groundbreaking happening there. We are already seeing on even the data center side, a lot of data centers being picked up. So I think it's a phenomena which should be encouraged by any progressive government. And good thing for us is that our government is also focused on Make in India and incentivizing manufacturing in India through various schemes including PLI, lower income tax and so on and so forth. So I think that is again a good segment. But as I said, India is diversified. India will be consumption, India will be infrastructure, India will be some base level sector like the banks and so many other sectors. And India will also be some forward-looking sectors which would be the data centers and the renewables and the AIs of the world. So I think you have to basically have a diversified portfolio and obviously have overweights on sectors which you feel are going to grow faster.
So within this basket also, I think, usually what happens, we see trends. So Neil Singhania ne ye stock liya hai aaj. Let's start looking at opportunities there. A lot of other investors like a Madhu Kela, you talk about Vijay Kedia. The moment, marquee names do come in for stocks, may it be a small cap, mid cap, whichever stocks, the retail investors run towards it. I'm sure there might be times where on some companies you will make money, some companies you will lose money. what should that retail investor do who's actually relying on not your advice, but it's more your action?
See, what happens is, how does followers develop? Based on past.
Correct.
So investors have seen that some of these marquee names you mentioned have done more right than wrong in their life. And obviously that's why there is a follow-up which happens. Having said that, from a retail investor's perspective, one thing which we have to also realize is that every investor will have a different risk appetite. So an investor with 50,000 crores of net worth, if that investor buys 10 or 20 crores of a stock, you just can't blindly go and buy disproportionate to your net worth. Because it is always possible, as you rightly said, that any good investor can go wrong. And it is also possible that the sell-off, and the sell-off you will not be able to know. So I think from an investor's perspective, it is good that you follow successful investors because they will be more right than wrong based on their past record. But at the same time, manage your risk internally.
I think that gets me to the question is, when to sell is the problem there, They've onboarded the journey, and then there might be times where the investor will realize, I think this is my risk appetite. It's given me the returns that I had to give my investors as well.
Borrowed information and knowledge will make you some income. They will never create wealth. So I think from a retail investor's perspective, there cannot be a better way of investing than just investing systematically in mutual funds.
I want to talk about that. You've just got the license for mutual funds as well. What is that thought process, as to why get into the mutual fund business, number one? Is it with the kind of boom that you're already seeing, the way SIPs have been panning out? Is that a better opportunity versus directly investing in equity then?
So directly investing in equity, one should do if you have obviously the time, you believe you have the expertise, and you also have the ability to hire people who can help you manage, direct investment, which I would say most people don't have. You are not going to be able to create a 20-member investment research team the way we have or some of the larger funds would have. And therefore, you'll always be at a disadvantage if you're an individual investor. In a smaller scale, obviously large investors have created their own ecosystem. From our perspective, I think we went into PMS and AIF. We have done reasonably well. There is a lot of investors who basically feel let down because they don't have that kind of money to invest with us. And obviously there is a huge market to cater. The other thing, as you rightly said, is that the mutual fund industry is also evolving. So when I joined Reliance in 2003, we had to tell investors what is a mutual fund and why mutual fund and what is a SIP. We don't have to tell them now. So as we evolve, there will be more exotic or forward-looking products which will come in through the special investment fund and so on and so forth. So I think looking at the future, we decided to at least make a small foray into it. Frankly, from an individual, it is a very tough call because you are going to be pitched against the largest of largest banks who have unlimited branch network and unlimited net worth in terms of funds, and to that extent we will have to tread
What
cautiously.
is the fund going to focus on?
Equities.
Equities, but is there a particular genre that you're going to look at?
No, so I think the largest funds within the mutual fund equity side is the flexi cap. So the idea is to start with that.
Okay.
But I think as we move forward, innovation is going to be the game. So next 3, 4, 5 years, we will try to create a separate niche where a few funds get sort of related with a Bacchus rather than the run-of-the-mill products, which will also be there. Let's see. जोश बहुत है, ideas बहुत हैं. Now it depends on how people bless us.
Always blessed. But to this, Sunil, the other aspect is the hype in the IPOs market right now. And I remember the last conversation I've had with you, or probably before that as well, you've always mentioned that you've always related IPOs to a lot of the way new movies get released, right? Are you still of that opinion that an IPO is not something which you can actually take an informed decision with because of the limited data that is available? Because the euphoria is absolutely gung-ho right now. And the price that is in the grey market or the unlisted market versus jo issue price aata hai, there is so much of that differential that comes in. What do you do?
So IPOs, frankly, is needed in evolving economy because some of the new sectors, new sets of entrepreneurs, you will be able to only invest if the company does an IPO. Having said that, I think what has happened is few things. One is the pricing of IPO leaves nothing on the table, frankly.
For retail investors, and that's
Second is there are obviously not all IPO companies are great entrepreneurs. So one has to be careful about that. Third is, as you rightly said, that there is limited information. And you depend on what the management presents to you in half an hour, and you take a call of investing 200, 500 crores from a fund perspective in those companies. From a retail perspective, the only reason you are investing is because there is a grey market premium, not because you understand the fundamentals.
Exactly.
So one has to be very, very careful. My view is that 75% of the companies which are coming out with IPOs will trade below the IPO price in the next 6 months. But there will be a set of companies which will be interesting, where there is merit, and where that will be the only way you can look at investing, because they are coming fresh as far as listings.
So would you say that in terms of IPOs, if you have that bandwidth to play the volume game, yes. But as an investment, look at IPOs only post-listing and don't really go with the grey market premium.
What do you mean by the volume game?
See, a lot of people who invest only for listing day gains.
See, that is not, those are not investors, those are arbitragers. You know, we are talking about investments. We are not talking about that category at all.
No, so you know what happens is, we speak to a lot of queries that we get. People ask us, you know, listing day pe itna gain hai, ab itna gain aaya hai, so maybe the company will perform well.
I am not the person to answer that question, frankly. I have no idea about listing gains, what to do and not to do.
No, so what I'm trying to ask you is, someone who's investing, is it better to take a call on an IPO once the stock is listed, to take some time to see how it is actually performing as a company and then look at IPOs? Because the valuations, as you mentioned,
for a retail
are
investor, frankly, again I'll highlight, if you don't have the wherewithal, avoid investing directly. Second is, good IPOs, why not apply? If you get allotment, it is good, because good IPOs normally will list at a premium. You know, I'm talking about good IPOs.
Yeah.
But having said that, there have been companies which are good, which don't get that kind of opening, but eventually then they develop. You know, there are so many IPOs which happened on the EMS side.
Yeah.
You got listing gains, but even after listing, if you bought, because these were good sectors, growing sectors, good companies, they have created a lot of wealth. Same thing has happened in some renewable companies. Same thing will happen in a lot of other companies which are listed. I think recently an electronic consumer brand got listed. Great response. The brand is good, growth is good. So I think selectively, good companies, you should definitely look at IPOs. But as I said, you know, most of the IPOs are priced beyond perfection and not necessarily backed by good promoters.
Okay. Now, to take this conversation forward, you know, IPOs is one aspect. We've spoken about the unlisted market. A couple of sectors that you mentioned about as well. How are you looking at IT as a sector right now as well? Because that's been that's a sector which is actually down the dumps. A lot of dependency. You're talking about, will IT as a sector emerge as a domestic player now with the TCS coming up with a data center here? The others are still dilly-dally. No clear commentary coming in. Do you think this could be a time where you could look at smaller names which are supporting the IT sector as well when it comes to the data center business as a multi-bagger? Would you see opportunities there?
So one is IT services companies in India have global competitiveness, and hats off to them, because if IT services sector would not have been there last 30 years, India would have never been what it is today. So much employment, so much foreign exchange being earned by them, and they have brought India into the limelight as far as the global stage is concerned, so hats off to them. Having said that, growth has definitely slowed down. You know, earlier companies used to grow at 20-25%, then they started growing at 10-15%. Now the guidance from some of the larger companies is 4-5% growth, and we have to appreciate that. Near-term performance has been pretty bad, and therefore it makes sense for a rally, which has already happened. Results have not been as bad as investors and analysts were projecting, and therefore, you know, I think things have settled down. Now, every company will try to have a path towards growth. You know, if you are not able to grow in what you're doing, you will try to see whether there is growth which is possible in some of the allied sectors. And maybe the company you're mentioning saw that. Some other company might not have that view.
Got it.
You know, because IT services predominantly was low capex oriented, high ROE services business. Once you get into data center, then you're transforming the business and you're becoming a high capital intensive, business.
It's a different business
So
model.
not all companies might be willing to do it. So I think for each, they will do what they believe is going to be the fact. But I'm very sure that forward-looking entrepreneurs will try to see how they can deploy the huge cash generation, which they will do. So all said and done, IT services companies generate a lot of cash. So they'll have to either do buyback or dividends, or they will say, okay, I can deploy this myself in a much better way. So it will be an evolving space.
My last question over here is, I think, and this is more of a advice to our investor right now. A lot of times we hear of people saying that, हम लोग ने Infosys खरीद के घर बनाए. I know I don't want to tell you, give a stock to any of the investors, but one sector or one space which you would say that, look at this space closely and probably you will be able to build a house in the next 10, 15 years like what happened with an Infosys. What would you peg that with?
More investors have built houses by systematically investing in mutual funds.
That is
Reliance Growth Fund, which is now Nippon Growth Fund, till 2017 when I was managing it, grew 100 times in 21 years. That has become now 400 times. Now I don't see too many stocks which have become 400 times in 30 years. In fact, in Reliance, we had an investor who had put a board outside his house that this house has been made due to investments in Reliance Growth Fund.
Wow.
So for a retail investor, it will be very difficult to pick one stock and say after 20 years it will be 100x, because it might work, it might not work. So you have picked one stock, but there might be 100 which have not given that. And when you are investing in a diversified portfolio, the chances are much higher.
Okay, but that's also very good advice, right? For someone who can look at a diversified fund right now, start your investment, maybe you will be able to build a house in the next 15, 20 years as well.
You will definitely be able to build a
So that's the optimism that we should look at. But thank you, Sunil, so much for joining us on the show. Always a pleasure.
Thank you.
Speak
Happy
to you.
Diwali once
Happy
again.
Diwali. So that was Sunil Singhania, a candid conversation from a multi-bagger. You're talking about multi-bagger portfolios with mutual funds from here on, and that's going to be the story for India.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money. through the masters who shaped them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal, a leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
At a time of global uncertainty, when leaders balance risk with resolve, the most definitive leadership conversation unfolds in New Delhi this October. Catch Prime Minister Narendra Modi defining India's moment in history. Harini Amarasuriya, Sri Lanka's Prime Minister, steering the nation from crisis to recovery. Rishi Sunak, the man who reshaped Britain's political narrative. Tony Abbott, bringing clarity to the geopolitics of the Indo-Pacific. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network, bringing the world to India and India to the world.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the
Good evening and welcome to the big question on NDTV Profit. I'm Vikram Oza, and this evening we're talking about your retirement money, your provident fund, and why the government thinks you should not get your hands on it too soon. The EPFO, the Employees Provident Fund Organization, has rolled out sweeping reforms that change how India's salaried workers access their provident fund and pension. So now you can make a full provident fund withdrawal only after 12 months of unemployment. Earlier, you could do it in 2 months of unemployment. And pension withdrawals, they get pushed even further, 36 months after retirement. And for the first time, at least 25% of your provident fund must stay locked in for life. So the new rule book also brings in a uniform 12-month service requirement, easier digital transfers with no employer approval, and that's an important